really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Yeah. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hey, I just finished making coffee, so you guys stay right there. I'm going to go get coffee. Hold on. Segue music. Each morning when I get to the office, I have a routine, guys, where I get into the office and usually the first thing I'll do is I'll go, clean the kitchen. Like we just have like silverware and plates and stuff. And for those of you who are not aware, we have about a 8-person team in Atlanta, and we do all of our stuff in a studio office that we've got. So I'll usually start my day with that and then put on coffee. And so long story short, did you guys like that intro music? Hey, check this one out. Playing around with my soundboard this morning. Kind of like this one. James put this one together. Actually, I'm hoping this isn't too loud. Tell me if this is too loud or sounds good, guys. Vibey as anything. It is a Thursday. The ECB is getting involved. We saw, actually, let's pull up the euro. I don't know. What you guys, was that audio too loud, too soft? I'll play it again. Relative to my voice, you guys gotta let me know. It's good. Appreciate you guys. Okay, so let's talk euro for a second because the ECB it's got some interesting stuff. Too loud? Some people are saying it's too loud. Okay, just because you said that, I'm going to turn it down just slightly. Not a lot. This is behind the scenes. So my vibe sound effect here. I'm just going to go right here. Try this again. Ready? Try that. Maybe just a little quieter. I like that sound effect. It's fun. We got a lot of good ones. A lot of good ones. Fortnite. Got the mystery box from Call of Duty. And tell me if anyone's heard this one before.
You what?
Come on, that's childhood one-on-one. Did anybody else watch like a million hours of SpongeBob when they were a kid? And if you didn't, I watched enough for you too, so don't worry. This is a really interesting comment, Lee. I'd be lost without a dishwasher. That is so true, though, now that you say that. Nick, what time is it where you're at? It is 8:23 a.m. in the morning. The party's just getting started. Let's take a look at some charts. So the euro, what I wanted to get to with that is the ECB here. Let me pull up my Forex factory again. So ECB had their monetary policy rate, their financing rate come out at 4.25, so they didn't change it. They also had their monetary policy statement and doesn't seem to be causing too much of a volatility spike in the euro at this time. However, remember that it's always about the press conference. The reason is always about the press conference, whether it's the ECB, which is the European Central Bank, or the Federal Reserve or the Bank of Japan. It's all about the future, right? We're all about the future. I think it's a soundboard day. I'm not going to lie. I'm going to play around with the soundboard and it's going to be fun. So the reason it's all about the future is because markets already knew and expected this to be the case. That's why I didn't move that much. This is often, a confusing concept for newer traders. I know it confused the heck out of me for a long time. Markets are so forward looking. I was having a conversation with my wife about this yesterday. We were talking about how far ahead markets are looking. And she was a little bit like, what do you mean they're looking 6 months ahead? No one knows the future. And I was like, that is so true. And markets do get it wrong sometimes, but they're generally looking far out in terms of like forecasts and estimations of what's going to happen, so etc. No emphasis on unemployment claims. It is totally important. We got 5 minutes to go on that. Claims will be very useful this morning. Is your wife watching these streams too? She works in medical device sales, so she is out and about at this time. But I think she watches the most of my stuff on Instagram because she follows me on Instagram, I think. Got the cat dad mug out today. I got to find my charger for this one. You guys, this is a heated coffee mug, but I got to find my charger for it. The only thing is I got to drink this fast. The reason I got the heated coffee mug is so that I could, not have to drink coffee so frequently when I'm streaming because it gets cold. Let's be careful with gold. She's a wild horse. Gold is wild. So speaking of gold here, as we go into this press conference from the ECB and we get unemployment claims this morning, what are we looking for? If you are like me and you would like to see gold just drift higher and higher and higher, then we want to see the ECB continue to talk about easing monetary policy and staying in line with kind of like what other central banks are doing. Like the Fed is expected to cut interest rates in September. You want to see the Central Bank of Europe, the ECB, also wanting to cut rates pretty aggressively. Somebody asked, does your wife take your trading signals? My account and my wife's account are the same. So we've got the same trades because we've got the same account. Technically, my wife is long gold and she does know it, but she doesn't pay any like I tell her like, hey, we got a gold trade going really well. And she's like, that's great, honey. She doesn't say honey. We don't call each other honey, but I just figured, that's like a phrase. So anyways, she's funny about that though. She's one thing I absolutely love about my wife. She's not impressed about money. And I think it's amazing. She never has been, even before I had any money. Anyways, that's how you know it's a good one. She doesn't care about money. I mean, obviously who doesn't like money, but she does not, it never impresses her. Like sometimes guys, this is crazy. Ready? Sometimes I will tell my wife a ridiculous number and she still doesn't react. I can't get a reaction out of her. I'll be like, hey, we had a really good trade on the NASDAQ. We're up like $75,000. And she's like, wow, really? That's fantastic. And it's like kind of like a, hey, that's great. Keep going. But I'm like, okay, we didn't have a $75,000 trade on the NASDAQ, but if we did, would that still be your reaction? It's crazy. Anyways, I'm all over the place today. I bought the NASDAQ yesterday. I look like an idiot at first, but we might be back to, I'll show you the Qs. So I went long QQQ. I think I'm still in the red now, but we came really close to stopping out on this trade, and we're triggering a little bit of we almost triggered the stop loss here, but didn't quite. Came back, and now we're just about break even. I mentioned yesterday that, my idea on the NASDAQ is I'm going to buy the NASDAQ, and if it doesn't work out, I'm going to look for a couple chances to try again. So I'm starting a campaign here on the NASDAQ. A lot of people, myself included, John Cena music, starting a campaign on the NASDAQ. The question is, do we hold 20,000? We're testing the area right now. If we don't hold 20,000, I'll stop out on this one. And I might look at it again at like 19,500 on the NAS 100 CFD. Now, I'm not trading this particular chart. I mentioned that I'm trading the Qs, or QQQ, which is a ETF that I can trade on my brokerage that I trade on, which is Webull. By the way, if you want to trade with the brokerage that I use, we'll drop the link to it in the chat. This is Webull. This is what I've used for, I guess I've used them for like 4 years now. My favorite broker of all time. I love Webull. Like, for my purposes. Do I think they're the greatest broker ever? I mean, I guess they're pretty good, but for my purposes, what I trade specifically, they're great. I can trade options, individual stocks. I can trade ETFs, so I can trade the S&P 500 through SPY, or the Qs, which is the NASDAQ. Absolutely perfect for what I do in the markets. Not necessarily great for everybody, because some people want to trade futures, etc. Guys, sorry, I missed the breaking news. Let's take a look at claims. Did anything come out surprising? Let's take a look. 243. So claims came in higher than expected. 243,000 unemployment claims compared to the forecast of 229K. So what does that show you? That's going to show you continued trending of jobs data cooling. Now, there is a difference between jobs data being weak and jobs data cooling. What I would say we're at is we're definitely at the cooling stage. I wouldn't say our jobs data is weak, because if you look at the US and you say, well, where's unemployment at? Unemployment rate is at a multi-year low. Like, in regards to unemployment rate overall, things are not that bad. However, the thing that, myself included, and why I'm partially long gold, is that we've been trending higher on the unemployment percentage rate. So what does that signal? Well, here's the thing. I have a little trade on, well, 2 trades on my gold trade, but also I don't talk about this one as much. TLT. Okay. This is a proxy for bonds. Okay. The TLT is 20+ year treasury bonds. And I have a long position on this one. Now, I don't talk about this one too much because Admittedly, I'm a content creator and I want my stuff to be exciting and I want, people to watch my videos. We put a lot of time and effort into making these videos and live streams. I want people to watch my stuff. And let's face it, bonds are not particularly exciting. Most people, when I talk about this stuff, they don't watch anymore. They click off the video. It's just not as exciting. Everybody wants to talk about gold and the NASDAQ, and that's fair. Those are my favorite things to trade too. But don't forget about good old-fashioned TLT. What is TLT? TLT is a long duration bond ETF. That means it's basically holding a ton of different long dated bonds. When you buy this ETF, it's like buying the SPY, but instead of buying a bunch of stocks, you're buying a bunch of bonds. So boring, but also so key that we understand this. If you get an environment where, ready, let's do our little drawing here, growth, and let's say inflation, and let's say interest rates. Okay. So I want you to kind of think through this with me for a second, and hopefully this is helpful to you. The consumer is a debatable spot in the market. When I say the consumer, what I'm talking about is when we talk about, how inflation makes it very painful to go to the grocery store for a lot of people, especially the middle class and lower class of America. And by the way, for my non-US people, we're aware that inflation is not just a US problem. We know it's global. Inflation has really changed for a lot of places. Like the UK's inflation went parabolic and has come down substantially. We just saw yesterday the CPI for the UK actually hit 2% on a year-over-year basis, which is a good progress point. However, we still have higher prices across the board, and consumers are likely feeling that now. In recent months, there's been an increased probability of recession, not just from my words, but take a look at what the Fed themselves have said. They've said there's an increased probability of a recession. I'll get to the yield curve in a moment. But let's just say for a second that we see the consumer really start to pull back even more so than they already have, right? People aren't out buying Nikes. You guys seen Nike stock recently? Here's a good indicator. And by the way, if you're somebody who doesn't trade individual stocks, let's say you trade FX, let's say you trade indices, don't ever rule out how valuable understanding individual stocks can be. It's an incredible indicator. Nike by itself is a good indicator. It's not the only one, but Nike being down. Nike, I'm wearing some Nikes right now. You guys ready? Got the Air Force Ones on, right? I like Nike shoes. What do you guys think? What's the vibe on Nike? Have I missed the train? If I'm getting into Nike pairs of shoes, they're probably past their prime because I am just not the most fashionable guy in the world. But I do like Air Force Ones. I think they're cool. I think they're timeless. I think, Nike's been around for a long time. But Nike stock's gotten killed recently. And part of the reason for it, at least from what I gather, listening to, their earnings call themselves, is that there's been some steep competition. People in the running community seem to be going for Hokas more often. Maybe a shoe professional out there can help us more on this topic. But my point is Nike's like down bad, but partially because consumers just aren't, raging about their shoes right now. They're expensive and people are feeling the pinch. And it doesn't help that now you've got unemployment rates starting to slowly rise. So my point with this is never rule out individual stocks. They can be so useful. Nike stock went down because you got a pair. That's the reason. I should have bought a pair and short the stock. Then the pair would have been free. Hold on. I need a sound effect for that. Right? Because if I had anyways, my point with this is, let's just say for a second that we enter into a period where you get growth slowing, like the consumer is kind of hurting. And we also see inflation cooling down because at the same time, growth is cooling. If this accelerates, these two things probably make TLT look pretty strong, especially if in combination interest rates are coming down. If everything's kind of coming down, I think bonds are a decent place to be at, because if so, bonds typically rise and fall based on what interest rates are doing. If interest rates are expected to go down in the coming years, uh, or inflation is expected to stay under control in the coming years, likely bonds will become more valuable, because people will say, okay, great. You have to think about, like, bonds are for the boring, people who are trying to just park money stable and collect a positive return that's pretty much guaranteed. That's what bonds are, right? So my concept there is that they look at, bond investors say, well, what's inflation likely to be over the next 10, 20 years? If it's higher, then we need to have a higher payout from the bonds to help cover that inflation. I know this is kind of a boring subject, but it's also the same reason I think gold is going strong right now as well. Same general kind of feel, which is the economy is showing signs of not necessarily crashing, but cooling. And we also have inflation cooling, and we also have interest rates expected to come down. That's a combination that, generally speaking, looks pretty good for gold and TLT. Now, where TLT would become very, very impressive would be if, we see basically inflation comes down, interest rates come down, and growth just kind of hangs in there, but it's kind of on the more recessionary side. If you see a more recessionary looking environment, TLT is going to look really good. So we'll see. It's kind of like my hedge in my portfolio is keeping a little TLT, but we'll see. Anyways, let's take a look at the dollar for a second. The dollar index did break this level here at 104. Really, really big milestone for dollar bears. We closed to the downside yesterday. I have two USD pairs, USD pair trades open right now. I'm short dollar Swiss, and I'm long the Australian dollar against the US dollar. Both of those trades are starting out well. You can see the dollar Swiss actually came back. I'm sorry, the Australian dollar against the US dollar moved immediately in my favor and then came all the way back to break even and has bounced since then. We'll see where it goes from here. I've got to stop below structure if this can't hold. And if this thing pushes off, then I'll look to trail stops, especially if we can break through this high. If we break through that high, then I'm going to definitely look to trail a stop into profit. Why is gold moving down when we had higher than expected unemployment rate? Gold is moving up today. Now you might say, well, on the tiny time frames, yes, but I would say gold's actually up today. We're up 0.3%. So typically, if you're looking too low time frame, it can be a little confusing. That's why I typically personally look at like the 1 hour and up on my charts. So unemployment claims rising has been the theme. So we confirm that the theme is still intact. So to me, that suggests that it's not that we're going to just see skyrocket for gold on that, but we might just see limited downside because of the continued supported thesis. But for gold to keep going higher, what do we need to see? If gold is going to pump higher from where it already currently is, we need more fuel to the flame, if you will. So unemployment claims coming out worse than expected here is something, but it's not like jet fuel to go into this fire. You need like the ECB. This is probably more likely to cause a stir, to be honest. If they come out in the next few minutes, the ECB comes out and they say, look, we're going to have to cut rates pretty rapidly because we see some material weakening. I mean, they're not going to say this, but if they suggest something that would indicate to the market rate cuts are going to come fast and heavy, gold, that would be jet fuel to gold, right? That would be like, oh, boom, there we go. If they say something to the contrary, like if they say, the European zone has been resilient in its services PMI or something like that, or some indicators tell us that the economy is doing a little bit better than we thought. Like if there was pushback, if they seem defensive on wanting to cut rates too soon, the gold market could come down. So it's all in the narrative that's forward looking. So with the ECB, we've got that coming out here in just a few minutes. So that could definitely be market moving. So stay tuned on that. By the way, guys, I mentioned that inside of the group recently inside of the group, we've been really catching a lot of decent trades. The Australian dollar, the dollar Swiss, TLT, gold, and now the NASDAQ. We'll see what the NASDAQ does today. I'm back very slightly. Oh, I'm back to break even. Yesterday, my entry was a little bit early, but we were at break even on that trade. So we'll see where that one goes. But we're sharing every trade that we take inside of the group. I'll show you what it looks like. Here it is. So I bought the NASDAQ yesterday. I'm trading things like gold. We trailed out for a profit yesterday on silver. I've been taking a lot of trades. Frank too, he's long gold, I believe. So yeah, he's got a gold trade that's going really well. We're taking lots of different trades. The Australian dollar, USD, CHF. So we trade a bunch of different stuff. We trade stock ETFs. We trade FX. We trade commodities. We trade indices. We're very active. And if you're not already in the group, then I got something cool for you. Right now, we are currently doing a huge discount off of memberships. So if you've thought about getting into the group in the past, we're currently doing 45% off. If you click the link being dropped in the chat right now. What about your US 100? So the NASDAQ position, like I said, we're just at break even. It's on the screen right now. Let's come back. My entry was a little bit early, but I mentioned that my goal with the NASDAQ is if I need to take a couple entries, I will certainly do so. I'm not so super focused on entries. I'm all about kind of general direction and being, seeing if I can catch it. I oftentimes have to take more than one entry to get the right trade going. Like with the gold trade, there was, this gold trade that I've been in has been a really good winner, but it took me a couple entries to get involved. It took a couple stop outs before I caught the right trade. So I oftentimes, the first entry might be wrong or the first entry might be right. Sometimes I get it right on the first one. So I just think that, entries are, in my opinion, highly overrated. New traders obsess about them. I'm telling you, if you're not afraid of stops and you're risking appropriately, it's okay to have to re-enter a couple different times. Anyways, we are going to be joined in just a moment by our first guest of the day. We're going to have Marco join us, which should be good stuff. We got Miko and Marco here today for our Technical Thursdays session. Stay tuned for that. We will be here with them in just a moment, right after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, and we are back with Miko and Marco. Good to have you guys back on the show. Hold on, I got music for you guys. Ah, yes, got some music. Say hello, gang.
Hello.
Good to see you guys. Hello. Yeah. So we haven't spoken in about a week. We do this every week, but things have been crazy in the last week. We've seen the dollar fall off a cliff. We've seen, gold continue to push higher. Bitcoin even has been all over the place. We got a lot to talk about. So I guess we could jump right into it. Marco, you take the first go. What are you watching today?
Sure. So for me, can you see my charts?
Mm-hmm.
Okay, nice. So for me, I'm watching not the euro and US dollar. It looks pretty range bound right here on this 1 hour chart. EJ is on my list because it's overall looking a bit descending. So I'm expecting a reversal uptrend to happen. I still need the confirmation, so I need a large push and then a nice entry pattern. So that one is definitely on the watch list. AU for me is a bit flat and range bound. AJ looks even better than EJ, so I'm definitely looking to see this descending channel play out. I'm still waiting for a large push, but hopefully we get it today or tomorrow. Pound is going to be pretty flat and range bound. We had some really, really nice, extremely clean momentum that I have not seen on the pound for a long time, but unfortunately it just could not commit. Instead, it just printed a big V reversal basically. So now it's flat and range bound. And the final one is going to be NJ. It is the same story as the Aussie Japanese yen. Large descending channel, very, very big. So expecting a nice uptrend to start. If it does, I'll look for buy setups. So for me, I have the JPY pairs on the watch list, and that's about it. The dollar pairs are looking a bit corrective and range bound right now.
Yeah, the what you mentioned about the pound definitely seems true. I mean, this thing has been really moving like crazy, so we'll have to see where that goes. But a big thing for me was like this huge breakout right around the 1.285 level, and now we're at like a high of the last year. We've come back to levels that we were in July 2023.
Yeah.
So it's really
finally some movement, because the pound has been really corrective in the last couple of months. I haven't had any winning setups on it.
Yeah, really making a big move there. Miko, what are your thoughts? I'm curious what you are looking at with the dollar index. We always talk about the DXY. What are your thoughts on it?
Yeah, I'm pretty bearish on the dollar. The way I'm looking at it is we've had a very corrective move over the past, well, since the year began, really, since 2024. You had this ascending channel here, and it looks like we finally committed to the downside. I remember last Thursday we were talking about the support level, and if it breaks, it could open up the floodgates for dollar. It has broken, but I would like to see a bit more momentum, a bit more follow through to get a bit more confirmation. But the way it's looking to me, it does look like we're committing to the downside here. So going forward with the dollar, I wouldn't be too surprised if we see, a huge move down, maybe back to 101 or 102 potentially. So I'm pretty bearish on the dollar going forward. So all the kind of dollar majors, pound USD, euro USD, I will be looking for bullish opportunities. Pound USD, like you mentioned, really nice breakout. I'm looking to see if we can get back here. We've been really bullish, so I'm not too sure if we'll see a pullback that big, but if it does happen, fantastic. I will be looking for opportunities. Also, as we approach this area here, I'll see how we react as well. Then we might just see more of a shallow pullback and price just continue. So I'll be watching pound USD there as well. Euro likewise, I'm interested in that one. Aussie dollar likewise. I like this one to the upside. It looks to me like a lot of dollar pairs are showing signs that it's going to continue to see more dollar weakness, and they're going to continue higher. So Aussie dollar as well. Really nice breakout outside this range. Hopefully a decent retest of that level and some buys back to the high over there remains the plan. So yeah, I'm pretty bearish on dollar. I think we can see more of it.
Yeah, fair enough. I actually have a position on the Australian dollar right now. So we'll see where that one goes. I had two different ideas on the Australian dollar, similar to yourself, Miko. I think we have this level drawn together. I went down to the 4-hour chart. I like this zone. I bought it here. It's moved in my favor, then came all the way back down, and now is slightly positive. So we'll see what can happen with that one. But my idea with this is that if it comes down and breaks this support level, I may try again around that same level you've got marked up around 66.80. So I like that. I like that chart as well. I guess going in our theme, the next big one is, with all this currency talk, a lot of central banks seem poised to cut interest rates this year, and metals have been on the move. So I guess we could go to gold now. Miko, Marco, we'll go to Marco first on this. Gold been trending up a lot recently. What are your thoughts on this one?
Yeah, so for gold, actually, I think gold broke out of the major high, didn't it? Yeah, it did.
Yep.
So that's pretty good. I like how it closed above this high. It's looking much more bullish than silver. Silver is, I believe, still stuck in this range, so that's not the best story. But gold has a bit of potential. What I want to see is follow through. We had a breakout, broke the high, and then closed above with a clean close. But the next candle retraced, so this might just go retrace back into the range. I want to still see a bit more commitment. So what will happen in the next couple of days, maybe the next week, will be a deciding factor. What I would forecast, or what I would like to see, is this momentum kick back in, as we saw it right here. Something like that to start again. So large bullish legs with small pullbacks, that is kind of the best story for a bullish scenario. So has a bit of potential, but still is not showing me that 100% commitment to the upside, to be honest.
Yeah, that's
But
fair.
it's better than silver. Silver looks pretty flat.
Yeah, I can definitely agree with that. I had a long position on gold and silver. I actually trailed out of my silver position after we broke this 30.4 level. I had a stop behind it, so I did get triggered out of my silver position. And like you're saying, gold's break of the high is a good start. But for my entry here, I've got my stop loss just trailed behind this structure here where we broke out, because same to you, Marco, this is a really great start to a breakout, but if there's no follow through and it falls back under this level, that's going to just tell me like, okay, great move, but the lack of follow through is a little bit concerning. That being said, if we see, a nice, any sort of pullback and it does find momentum again before, breaking support, I'd be fine to continue holding it. So I do like gold to the upside. And I've said this many times about gold, but when gold makes its moves, it's so sudden and so continuous. So knowing that about gold, I'd like to see, to your point, when it does start to break out, the momentum is still there, like it doesn't slow, because otherwise it could enter kind of into a corrective or, even a pullback or turnaround story. So we'll see, but I do like the momentum for gold right now as it stands. So we'll see where it goes from there. But I guess same question to you, Mika. Are you watching the metals at all?
Yeah, I'm looking at silver. I feel like gold's left me behind because, as you guys said, it's creating new all-time highs here.
Yep.
So my interest is not really with gold, although things are looking very bullish right now and could probably still see higher prices. My only worry with gold is that last time we did take out the high, price was a little bit corrective, and we did have another move down. So I'm wondering maybe we could see that happen again. I think if we get some real follow through, then that will kind of disregard that possibility. But if you kind of mess around here for a little bit, my worry is that gold will pull back. But on the other hand, silver's been a bit weird, I must say. I was expecting to kind of rally with gold and come back to the high. It hasn't quite done that. But because it's not there yet, I still expect it to get there. So buying opportunities make sense to me. However, the way price is shaping up, we're really struggling to push higher. So I'm expecting another move down for silver. And then I'll try and see if I can take some buys back up again. I mean, I'll be trading my stop loss, so I'll see how far it can go. But the way we're rejecting here looks like it might be a shorter term move, because I've looked at some other metals, copper as well, platinum. They actually are seeing some downside. So I wonder if we might see a bigger pullback for silver, maybe even a test of the support makes sense as well before maybe a big move up. I'm still only looking for buys, but way things are shaping up is a little bit awkward. But I'm looking at the higher time frames, still looking very bullish. So I think it will be a matter of time before we get there. However, we might see a bigger pullback at some point.
Sure. I have a question for I guess both of you, but I was talking about this just before you came on the show about how, like, for me, entries, well, not even for me, for everybody, entries are difficult. Like, getting the right entry is just hard. And in my personal opinion, I think actually even overestimated in how important they really are. Obviously, you want to take good entries. You want to time your entry as best you possibly can. But to me, like, a good entry is not absolutely make it or break it, because a lot of times for me, I'll take like one entry and maybe try again. So I've got my silver idea pulled up here. Let's just say, for example, I actually don't hate this idea. Let's say I'm willing to be bullish on silver. Like, I generally think that the direction is going to be long on silver. And let's say I take an attempt here and I put a stop loss here. let's say this is attempt number 1, and let's say attempt number 2 is this level here. So like, let's say the second attempt would be a pullback down into this area where we found a lot of support previously, and we put a stop below there. So I like to personally call this like I'm opening up a campaign on a particular chart. Like my campaign is like I'm perfectly accepting that I may like I may just take this trade and it may just completely not work at all. And then maybe I get my second entry and I like that one better. Or the reason I take the campaign approach is because sometimes this actually was the right trade and it completely, makes the move. So I don't know. I'm wondering if you guys use anything similar, or like when you are bullish on something, is it like one entry and if it doesn't work out, you completely scratch all the ideas? Or do you ever employ something similar to this? I guess, Marco, your concept first on it.
Mm-hmm. So for me, it doesn't really make much of a difference. I mean, if I see a trend, I want to get into it. So as long as I'm seeing a high probability entry setup, I'm going to be buying. An example that happened recently was on the Aussie and the Japanese yen. I took a flag trade long right here, which ended up a loss. I think it was this one. Oh, sorry. I was on the daily chart, but I should have been on the 1 hour. So basically, yeah, here we have the flag setup and took this one because of the big uptrend that happened prior to that. But then the trade failed, right? But that doesn't mean I'm not gonna take any more buy setups. So basically, we continued up a bit more, and then I took another flag, which did end up being like a small winning setup. So as long as we keep getting high probability entries and we have the power of the overall uptrend, I'm gonna try to get in no matter if I already got in like 5 times and lost, because I know if I just get one home run that makes 10-1, it's gonna pay off for all the losses and then some. So for me, it's all about exploiting the trend as much as possible and as effective as possible.
Yeah, I think
small losses is not a big deal.
Yeah, no, I like that mindset, and that's the same concept for me. Is like, the reason I approach it with a multiple attempt sometimes, like a current example for me right now is the NASDAQ. So I took my first attempt here at the NASDAQ on the long side at this level. I really like this level at 20,000 psychological level for NAS 100. I think it has upside. So I've already taken my first stab. But just because I think it does not mean I'm certain it will, or, I'm not, a crystal ball owner. So I fully accept that maybe I'm too early. I like the direction, but if I'm too early and I get stopped out, then maybe my next attempt is here. And maybe I try again here. And each time I'm, keeping my stop relatively tight, I still want to see the area react nicely to my idea. But, I often will start these campaigns, quote unquote, for, things that I'm bullish on, because for me, it's like fundamentals heavy base. Like I'm generally bullish or bearish on something, and then I'm using technicals to try and time my entries. But I imagine fundamentals or not, a lot of traders use something similar. So I guess same question to you, Miko, when it comes to entries, or, you mentioned earlier, like you're generally bearish on the dollar. Do you do something similar where you will mark up a couple different attempts, or do you have like, this is my one quality attempt, if it doesn't work out, I scratch the idea?
Yeah, I'm very similar. I will have multiple ideas, sometimes potentially 3.
Okay.
But yeah, my thought process is every trade is its own trade. It's so unique, and every trade will have its edge to it. Some will win, some will fail. So as long as the idea is still at play, whether you expect the market to go up or down, then you're just looking for opportunities to take that idea, because to try and time the market perfectly every time is basically impossible. So whether it will have a shallow pullback or a big pullback, or it will be a reversal, or it will just keep flying or keep falling, we don't know. So even for pound USD, I have a couple of areas marked up for this one being my preferred level. But I can definitely understand that we are very, very bullish, and we could probably push on from here as well. So yeah, I will have multiple levels marked out, and I kind of just, even if win, lose, or draw on the first trade, if the second one comes through as well, I'll take that position too.
So follow-up question for you, Miko, on that, because your comment actually reminded me of something else, that a key component for the way I personally trade. not only will I, if we could show my screen for a second too, let's say that I'm looking at this idea on silver, and this is my first attempt, and this is my second attempt. Not only will I write up like 2 different ideas or entries, my weighting is not always even. So I'm not a trader that trades uniformly every single time I take a trade the same amount of risk. That I don't think is there's not a right or wrong answer there. And if you have a back tested strategy where you know like I risk the same amount per trade, there's absolutely nothing right or wrong necessarily about having uniform risk or not. But for me as a fundamental trader, like I just know, the same reason that the EDGEFINDER has like a weighting system, my position sizing has a weighting system too to go with it. So that's just like my personal approach. But like also on the technical side, if I like this area a lot better, I'm not saying like, oh, I'm going to risk 10% on this trade and like 1% on this. It's more like I might risk 0.25% for me on this trade, and I might risk 0.5% on this trade. Like I risk really small because my account size is larger. I'm not looking to make big percentage gains. I'm just looking to make steady gains overall. But I guess, Miko, just to follow up, do you do something similar, or all of your trades usually uniformly sized?
I keep all my trades the same size because
Okay.
I like to have the same amount of like confidence with each position, because sometimes some trades I take and I'm like, okay, this one's not too good, but then it plays out. But what I would do though, for example, like pound USD, I will be very, very picky with this trade here because I definitely do prefer this level.
Yeah.
But if I'm not seeing the price action how I want to see it, then I will step away. It has to look good for me to take the trade. But this one I won't be as picky because I know it's a better area based on my plan. So in terms of the price action, I'll be a bit picky, but when I do take a trade, it will be with the same risk.
Okay, I like it. And Marco, uniform risk, or do you have any weighting?
So 1% risk on all trades.
Okay.
But if I'm implementing a new entry, I start with 0.25, then 0.5, and then bump it up to the full 1%. So yeah, I kind of want to keep it simple. And since I'm usually executing trades on the phone, it makes sense to have just one number I need to put in for let's say a specific currency pair. So yeah, I want to keep it simple.
Yeah. Again, there's I would say there's no necessarily right or wrong answer, especially with different styles, because again, my fundamental analysis component does incorporate a different like weighting. Like there are times like right now, the gold trade that I've had that has been going really well has been one that I was very convicted on. Now, that being said, I was also very convicted on some of the previous entries that went terribly wrong. So, there's some context there, but I've had this campaign where I'm allocating a little bit more capital to, gold and my long bias on it. There's also a little slight difference because I'm not trading on an FX broker. I trade on a stock brokerage. So I'm using like a margin account. So I allocate like amounts of margin, which is slightly different than, lot sizing and risk per trade. It's a little bit different. Like when I buy gold, like I'm buying gold shares like GLD. So that has like a share price attached to it. And I'm buying X number of shares on it. So I have 3,000 shares on that. So like it's just slightly different. And that's just because I trade on a different exchange. But anyways, long story short, I think that's really important for people in the audience to hear that there is not a right way or wrong way. It's more, what have you tested? What are you comfortable with? And what works for you? So uniform risk, I think, is traditionally like a very acceptable way to approach it. And you have to be really careful with dynamic risk per trade, because a lot of new traders will take that and completely abuse that. They'll say like, oh yeah, like risk like 1%, and then I'm going to bump my risk up to like 10 and 20. And that's not at all what I'm saying. I'm saying like, my max risk is never more than like 3% on the account. And that's very rare that I would ever risk that much. So
really with risk 3%, that's a lot.
If I have like let's say, and usually a 3% risk for me would be more of like a position trade, like a long-term.
Okay.
So anyways, cool. Well, guys, I want to thank both of you guys, but before, actually, we got to do our last one. We always talk Bitcoin. Bitcoin's been jumping up recently, which kind of stinks because I was long Bitcoin and I got trailed out or taken out of my trade for a loss, and now it's moved back up. Marco, is it time to
Mhm.
buy Bitcoin? Are we going to see a big pump from here?
I personally am a bit surprised that we did not get a meltdown of price, because we broke a key low right here of 56 and 383, but it broke and just printed the wick and bounced off to the upside. So we're still kind of in no man's land right here, possibly moving in this very, very large overall pullback, let's say a descending pullback. But I'm not convinced of a bullish scenario just yet. Again, I need some of these highs to get broken. For now, we're just gonna be sideways for more time until we break the highs or these lows. So I could not really make a decision. I mean, depending on maybe, but if the stock market, if the S&P makes a big move, maybe the Bitcoin can follow, because you said that both are risk on assets. But yeah, key levels are drawn, so let's see which one breaks first.
Yep, totally fair. Miko, same question to you. What about Bitcoin?
Yeah, it's been interesting. We came back to the lower end of my descending channel. We had a really nice bounce there, actually. So yeah, I mean, it's been a really strong reaction, and I'm still expecting the market to eventually push high, explode higher. At one point, I'm not too sure, but it's going to be interesting to see what we do at this high, because last time we were here, we rejected a few times, and it's make or break, because if we start slowing down and showing some rejection wicks, then we could come straight back down and have that bigger kind of follow through that you guys were mentioning, which could be the case. But if we do break out explosively, then I think we could be in for another big bull run. So for me, I'll keep my eyes peeled on 70K. A break of that, I feel like we're on one. But yeah, very, very bullish reaction from that low. And I think we're probably going to see a bit more upside till we get to that area, and then I can judge price a bit more closely.
Fair enough. Yeah. Thanks, guys, for sharing your thoughts. And thanks to both of you guys for coming on the show today. Before we say goodbye to you, everybody in the chat, make sure to go follow and subscribe wherever you can find them on social media. We'll drop the links to their YouTube channel. I think we did it earlier, but we'll drop it one more time if you don't mind, Chandler. Thank you very much for that. We got Miko and Marco both on YouTube. Guys, make sure, go show them some love for helping out on the A1 Trading Show today. And guys, thank you so much. We'll see you next time.
Thank you.
Thank you. Good luck with gold, and see you next time.
See ya. All right. Yeah, good stuff, guys. And if we take a look here in terms of Bitcoin, Ethereum, both of those moving up. Marco was making a point about the NASDAQ, right? The NASDAQ being, pushing up here off the lows. My entry was, again, a little bit early on this one. If you see the NASDAQ push up, the NASDAQ and Bitcoin seemingly have been moving together a lot recently, but not so much in the last few days, right? The NASDAQ dropped off a cliff. Meanwhile, Bitcoin's actually doing just fine. A little bit of a divergence in that regard, but we'll see. I do like Bitcoin to the long side. I was actually looking for this entry point here. I missed this one. But I do like the idea of picking up a small position again on the long side. Bitcoin, even though I think I got long like over here and then ended up stopping out when it broke that level. So now that we've maybe bottomed out here, made a good push, I'd like to try again with a stop below that structure. So I'm watching for a little bit of a retest here. I do like it to the long side. We'll see. Anyways, gold overall, I've talked about this one a bunch here recently, but stop loss is trailed just below this market structure. If this breaks, I'm out of the trade. And if it continues to push higher, any higher low, I'll look to trail stops further. So just reacting to what the market does from here, really. NASDAQ, again, like I said, a couple trades that I've got open. I'm long NAS, I'm long gold. I'm no longer long silver. I got trailed out for a small profit on this one. Not nearly as much as I was floating, right? I gave back a lot of the profits on that, but I think it did close out profitable. TLT is another trade I'm in. This one, let's see what yields are doing this morning. Yields are up a little bit this morning. Yields are typically for this TLT position better when they're going lower. So if interest rate cuts are more likely or more expected, yields are going to fall and vice versa, which impacts my TLT trade on an inverse way. The Dow Jones had a huge push recently, broke through the highs, broke through this 40,000, completely smashed through it. Last couple times 40,000 had gotten hit, there's big rejection, but this time huge buying came in. So this one, to me, if you do get that pullback, I do like the Dow to the upside. I also like the Russell to the upside a lot. But this one, we'll see if we can get that entry. So I like the Russell. We'll see if we can get that. But huge explosive move the last few days for the Russell. So this 61.8% retracement looks really interesting to me. If I can get it, I believe we're also getting confirmation on the EDGEFINDER for this. Nope, not quite. Russell's at a neutral territory. So we'll keep an eye on that. It's a little far away from my entry point anyways, but we'll keep an eye. DAX is also bullish. Gold, silver. I mean, like everything on the EDGEFINDER is getting a bullish reading right now. It's pretty rare to see such a strong, conviction on the EDGEFINDER across the board. Bitcoin's on there. I mean, that's not been a bullish reading in a long time. So again, that's part of the reason why I like Bitcoin. So we'll see, but a lot of good setups, I think, out there if we can get some pullbacks, and I will be watching for a lot of them. If I take those trades, they'll be shared inside of the Discord. Remember, we're doing 45% off. If you click the link in the chat right now, speak with us, you can get access to all of our trades. Myself and Frank and Ivan, we're sharing positions that we're in. Ivan's like trading the Swiss franc pairs, I believe. So if you guys are not already in the group and you would like to trade alongside us, we share all of our trades with full breakdowns and explanations. We share analysis behind the trade, screenshots of it, and you also know it is happening on real live brokerage accounts, no nonsense, no demo accounts, no fake profits, nothing like that. So if you're not in the group, come join us. We'll drop the link here in the chat, where you can speak directly to a member of our team about getting that discount while it is still available. Today's Thursday, so you've got just a little bit longer to take advantage of those discounts before they end. So click the link in the chat to speak directly with a member of our team, and we'll go from there. Okay, guys, we got our next guest joining us here. Hold on, we got to drop the link. I'm going to drop it. Boom. There it is. Okay, it's there. All right, guys, we've got our next guest coming. We got Forex James coming on from Elite Traders. So stay tuned. We'll be right back with James just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on TradingView.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we're back with James. What's up, man?
Hey, Nick, how are you doing?
I'm good. Happy Thursday to you, and welcome back to the show. What are you watching today?
Well, NASDAQ, I heard you talking about that as well. It looks great technically on the H4, but there's quite a big red flag that I'm just a bit cautious of on NAS at the moment on the weekly time frame.
Okay, let's
so I'm just looking, ready. 1 second, let me find the where's it gone? Price range here. So I'm just looking for a potential mean reversion. So we've got a very similar situation that we had sort of back in December 2021. Now, I'm not saying this is going to happen by any means. I'm not saying that, this is guaranteed or I'm looking for it necessarily. It's more just something that I'm taking into consideration. So this blue line here is a 200 moving average. Mm-hmm. And we can see, obviously, the 200 is kind of like a magnet for price. We often do see when price deviates very, very far from the 200, we do see prices start correcting themselves. And this happens on all sorts of time frames. But yeah, the RSI as well, same formation. We've got, we had this overbought, pullback, and now back to overbought. So yeah, I'm not expecting this to happen really. It's just one of those things that I'm just a little bit on the edge about. So I'm just, not too comfortable going into it right now.
I got to show you something, James.
Sorry,
Check this out. This is just because you're on the topic. So I pulled up the weekly chart. Here's something, and this is coming from somebody who is currently long. So I'm also, long with a stop loss for this exact reason. Check this out. So I've just drawn a trend line from the low of March of 2020 to the top of this move. And this is kind of creepy. Maybe it's just coincidence, but if I just copy and paste, look at this.
Oh yeah, it's almost 1-to-1.
It's like the perfect move that matched that crazy melt up that we saw with all the stimulus stuff. Does that make me nervous? Yes, a little bit. The other thing that makes me nervous is company valuations are very, very historically high right now. They're not at like peak 2000 bubble levels. So is there room for them to get more expensive? Yes. And price to earnings is, although it can be a general theme of when markets are expensive, it's very not good for timing. It's very difficult to, we're in a bull market. That bull market can be, way more extended than I ever think it will. Anyways, I have a long position on the NASDAQ. And if it doesn't work, my stop loss is pretty tight on this, and I am definitely not investing on this one. This is a trade. So we've got a lot of momentum here, big pullback, but I want to see this thing either snap back up and just keep being ridiculous, or if the ridiculous trade is over, I'm going to stop out. But I like the risk reward here. That's why I'm on the trade, but I'm with you on the, as a overall theme. I think the market is expensive, and definitely have to be careful playing around at these levels.
Yeah, definitely. But yeah, I mean, on the H4, it looks perfect. And yeah, if it wasn't for the the extremely high price, I probably would enter this. We've got the 200 moving average, which just bounced off structure. The RSI was overbought, and we also had the sort of news move here that I do see needs to be corrected. So overall, I think it's a great trade to be in. It's just a little bit on the fence at the moment.
Yeah, no, I totally understand that. I feel that for sure. I think there's a lot of stuff that's been just pumping so hard recently. It's kind of a lot of people have been wanting to also get involved in like the gold trade and stuff like that. And if I wasn't in the gold trade, I wouldn't have anything to do up here because again, the market's made a huge move. I'd have to at least wait for a pullback to this previous all-time high. But yeah, it's a lot of things have just been moving parabolically. Another one that's been interesting has been the pound. The pound has made a huge move. The euro has made a big move. We'll see if it pulls back today. Dollar yen is. What do you think about dollar yen? By the way, we saw a big slide in UJ.
Yeah, I can show you my perspective on there actually. So I'm not sure if anyone in the chat was here for my past couple of streams with Nick, but essentially I've been buying the yen, selling the yen as it's been rising. So I'm in the Australian dollar yen and the US dollar yen. So these are my positions for the dollar yen. So I've actually scaled in again. And these are position trades. These aren't, day trades or swing trades. I'm not expecting this to suddenly, start rocketing up. So I'm not anyone to try and copy this. But yeah, essentially I'm just dollar cost averaging. The same on the Australian dollar yen as well, because obviously the Australian dollar is doing quite well for itself. It's performing well. Technically on the yen chart as well, this is a daily. So we're just sort of testing this resistance level as well. And we seem to be reacting quite nicely off it. And of course, the economics, the data for the yen isn't particularly good. It hasn't been for a long time. So in my eyes, it's still a very bullish asset. So UJ is a bullish asset to be trying to get into at the moment.
Yeah, no, I definitely like the breakdown you did there. And I actually like the Australian dollar again against the yen specifically. Of the central banks, the Australian dollar or the Australian central bank, the RBA, seems a bit more on the hawkish side compared to their peers. And I always like to keep an eye on that. We've also got a level here that we're tagging right as we speak, this 104.8 level. give or take, looks pretty interesting. So we'll see where that one goes. But I like that setup as well. And the yen, I don't know. It's been so beaten down, but that doesn't. A lot of times people will take that as like a reason for why it can't go any lower. But if you've been on that train, you've been on it for a long time. It's been going down and down and down. So, and to your point, I mean, I think we talked about this on a recent episode together, a recent show together. If we go take a look at GDP growth and we sort by JPY for a second, I mean, this is just telling the tale for me by itself. It's like growth in the Japanese economy is just not super impressive. Meanwhile, other economies, I mean, you mentioned the Australian dollar against the Japanese yen. Let's take a look at the Australian economy, and you can see, you know, it's not as impressive maybe as the US growth, but it's still positive, and Japan has, you know, negative growth. We take a look at, just while we're on the subject, here's Europe. Here's specifically Germany. We have that. So Germany's actually not been super impressive on the GDP front. Canada, we'll see if it loads. I can hear my computer working right now, so it might take a second. Or maybe it just won't work today. I don't know. Anyways, there's the US. So this is the theme we keep coming back to with US growth, which has just been, you know, astounding relative to peers in the last few years. We'll see if that US outperformance continues. One thing we could talk about, I don't have the data in front of me, but saw somebody talking about how if you were to take in the last like 10, 15, 20 years or so, the US stock market has just night and day beat like everyone else's stock market. But if you were to go longer term than that, that's not always been the case. I think a lot of times people will hear that, oh, like the US outperformance and it's never going to stop kind of thing. But it probably will stop. Like there will probably be big catch-up trades at some point for other stock markets, like maybe parts of Asia, things like that. That's another thing that is sometimes fun to look into. But take a look at like JP225. This is the Japanese stock market. It's been on a tear recently. I don't know, just a random curveball for you, James. Is there any other stock markets that you would buy or that you think have like upside if they were to give you a big dip? What, would you buy anything other than the US, or would you stick mostly to the US?
To be honest, no. So the FTSE, for example, I'm actually very bearish on. I've been very bearish on essentially the UK in general. But even on just a technical aspect, regardless of economics, the FTSE is disgusting. It's not something, if we take the S&P 500, in fact, actually, let's do that. Give me 1 second. Let me just compare these two. So look at the difference. Look, if you were trying to buy the S&P, like a lot of people do, you buy in every month, whether it's a Roth IRA or investments, whatever, the US just significantly outperforms. I mean, to be honest, India is actually quite interesting. I think that's a very interesting one to look at for the next sort of 5 to 15 years in terms of potential emerging things coming out of India. But for now, in like the very near future, nothing outside the US really. Yeah,
and you mentioned India. I'm just going to try and see if I can find a chart here. So the India's Purchasing Managers Index, I don't have this data on the EDGEFINDER, but India is another interesting market. And that's the thing I look for is, when I'm thinking about like stocks or markets that I want to be involved in, I generally want to be more involved with places that have really strong, manufacturing and or services. The advanced economies, they are heavy on the services side, like the US is super heavy on services. But I always like to keep an eye on like PMIs as a good indicator for, expected expansion or decline. And India has, in my view, a huge potential upside. They have a history of getting bullied around by, historically the UK, but over that period of time, why did the British occupy India and hold it so tight? Well, it's a powerhouse region. There's a ton of natural resources there. There's a lot of people there. There's a innovative spirit there. I like it. I mean, I like the idea of buying India India's stock exchange if it does have a pullback at some point. It's a little bit, it's had a humongous move here recently. But if you
Yeah,
get
I
a
was just
correction,
looking actually.
yeah.
Sorry, go on.
No, that's all I was going to say. I was going to say if you get a
Oh, okay.
correction, I'd be interested.
Yeah, no, I'm just comparing the Nifty as well now.
Yeah,
It's outperformed the S&P 500, and then obviously the UK, the FTSE 100 down here at the bottom in blue. It's night and day, as you said. It's essentially a no-brainer to, maybe ignore a lot of the European things. You can have a look at the DAX as well and see how the DAX has done, which, it's not any better than the US in any way. It's only slightly better than the FTSE. So yeah, it's something to keep in mind when you are investing and things.
That's the thing is, the markets just go so much deeper than I ever, I learn new things like every year about how deep the markets go. James, and what I mean by that is like, here we are talking about, new traders might just obsess over like looking at the NASDAQ or like looking at the US 30 or looking at gold, but it just goes so deep. Like you can trade, if you trade indices, well, you can also trade, global indices. Like another hot topic one is, trying to time this China trade. Like are Chinese stocks cheap or are they going to get much, much cheaper? I think that the, popular opinion right now, and I also share it, is that China's a little sketchy. It's hard to invest in China. It's a little hard to invest in them. But then, you have like India. I like that a lot. As you mentioned, I'm just looking at some ETFs. This is here's all emerging markets, which have been beaten down. Here's Japan's stock market. Here's Germany's stock market. These are ETFs that I just watched. But interesting stuff. I generally, think that I want to stay most heavy in U.S. Companies just because of the, the really strong capital markets we have here and the very capitalistic approach. But there are heavy contenders out there in the global stock
absolutely
world.
I think for newer traders or people that aren't too keyed into the indices and stock markets and things, it's a lot of import and export. So when you're looking at things like the Nifty, comparing it to the US, comparing it to the FTSE, a lot of it is look at the output that the US is doing. They've got Apple, Microsoft, Nvidia. Whereas what's the UK got? It's a lot of financial services, but they're also located in the US. So for example, JP Morgan is also in London, but it's not anything significant. In terms of tech, there's nothing significant. Whereas India has a lot of things going out of it. And I think that's only going to increase, and I think the value of that's going to go up. But yeah, on the surface level, if you are looking to get into this type of trading, definitely just take a sit back and look at what country is exporting and importing different things, and what's the value of those things.
Yeah, no, really, really good points there, James, for sure. Well, James, I'm gonna let you take over the show for a little bit if you're cool with it, and just let you go through whatever you'd like to. Also, for everybody who's listening, if you're not already following Forex James, you can find them on social media. You can also find them on their website, elitetraders.io. You can see what kind of services they offer. If you stick around for a few minutes, you like what James has got to show, make sure to go support them. And a big thank you to you, James, for coming on the show. You've got it for a little bit, and enjoy it.
Cool. Thank you, Nick.
All right. See you.
So, guys, in terms of watch list, there's a potential position here on the euro against the SEK, which is the Sweden. So, essentially, the reason behind this trade is because we're expecting potentially quicker rate cuts for Sweden than we are for the euro. Just reading my notes here to make sure I get everything. So the dovish Swedish interest rate backdrop suggests the Riksbank could move quicker than European Central Bank. So essentially, this trade is just running from an interest rates perspective. And if we look from a technical aspect, we've got a really nice level throughout the middle here at sort of the 11.45 level. So obviously we created a bit of consolidation here, very minor. Then it got reused as support, support again, then got broken out of into resistance. So essentially the task now is to just see if we can get this sort of break, which we've got, and then can we get the retest and a continuation to the upside. So the retest, if we do get this here, is not just as simple as a retest, because this is also a 50% pullback. This would also potentially allow the price to meet the 200 moving average, along with the RSI down here becoming potentially sort of oversold, which would be a great sign. And then just a relatively short trade for a sort of 1 to 3, potentially 1 to 3.5, up to the fib extension level at the negative 618 level. And that would take the take profit up to this level right here at the previous highs. So this is quite a textbook position. So yeah, it's a case of if we can get this little pullback or not. Do you think the GBP/JPY will push from here? We could take a look. So I think, let's see. Potentially, yes. I quite like the H4. We're seeing quite a lot of rejection around this 200 moving average. Again, we've got the RSI that's oversold. I think the yen will continue to drop, but it's that thing of trying to time it, which is why I've done what I've done, which is the sort of dollar cost average method, rather than, so I entered basically here. So if I was doing sort of a regular trade that I would normally approach the markets with, stop loss, take profit, I would have been stopped out here. I probably would be in another trade here. Now, in my opinion, this is counterproductive because this isn't something like, I don't know, for example, euro dollar or pound dollar that essentially could sort of swing either way. This is more treating it towards like a stock or an investment. So if we look overall, if you just bought all these dips on pound yen, you would be in some serious profit. Now, please don't take this away as me saying, please go and buy pound yen. That's not what I'm saying at all. Obviously, you still need to manage your risk. You still need to approach the markets as you normally would. But this is just my perspective, and that's why I'm happy to sort of just buy these yen pairs and let them run. What do you think about euro dollar? Euro dollar, I'm actually short on the euro dollar. I can show you that one as well for transparency. So I actually got liquidated. Well, sorry, I didn't get liquidated. I had to liquidate some of my positions on euro dollar. I entered these dollar cost average positions way too early. I sort of entered down here and started sort of just adding in as price rose, and eventually my limits got reached. So the method behind that is, as I need to add one on at a higher price, I need to remove one off at a lower price, and then that averages out my position. So now I'm just looking to sort of get out of this trade. I'm not interested in adding anything on or managing it in any way. It's just a case of waiting for some sort of drop to obviously cover the losses from the earlier entries and also make the positions worthwhile in terms of a profit standpoint. So it might just be a technical level to around here. So somewhere around there would be sort of my short-term target, but we'll see. I'm not here to try and guess this. I mean, if we look at the let me just pull it up actually. Yeah, euro dollar on the EDGEFINDER is bullish. Just need to log in real quick. Here. So yeah, we are bullish overall on this asset. So again, these are just my perspectives and all the trades I've shown you so far. So the euro trade and the yen trades, they're not what I show on social media. I don't really, I don't call them in my Discord. I don't really show them to people because they're very high risk, and it's just more of a personal trade rather than something public. So, for example, we're in Nat Gas. Nat Gas is doing really well. So let me just drop down on the time frame here. So this is sort of a more regular trade. This is just a sort of a one-to-one trade. We did have our reasons for this one, so I can give you a very brief overview on this. Just give me 1 second to find the notes. So this one was driven basically by the European storage facilities nearing full capacity and the ongoing impact of Hurricane Beryl, which contributed to a 7.3% decline in natural gas prices since the week started. So we're essentially just capitalizing on this. We do also have a an event coming up. It doesn't seem to show it on here, but yeah, so that's one that pays the bills. Appreciate the insight. I am long. Cool, good stuff. What about GU? Yeah, we can take a look at GU. I've got an interesting outlook on GU, actually. I shared it in my Telegram yesterday, but I'll go into it in a moment here. What do you think about the interest we got today? Do you mean interest rates? What do you mean interest? Let me just double check the calendar. Yeah, I'm not sure what you mean by the interest today. Maybe I'm missing something. James, do you find yen pairs technically disobedient? Yes, sometimes. Yen is a bit difficult, which is, again, one of the reasons I'm happy to sort of dollar cost average it, because I'm not too interested in trying to time it perfectly. I'm happy to just be in the position and let it ride. But yeah, overall, it's not something I would really day trade, because there is that risk of interventions at any time. Essentially, the BOJ the MOF can just come in and pump money in with no warning, and they can do it essentially as many times as they want. Their cash reserve is massive, so they've spent, in comparison to what they've actually got, they've spent very, very little actually intervening in the yen so far. But yeah, anyway, moving on to pound dollar. So I am bearish on the pound dollar, and not necessarily because I'm bullish on the US dollar, more because I am very bearish on the pound. Now that comes from quite a lot of different aspects. So we've got a lot of inequality here. We've got energy crisis, living crisis, people are underpaid, no one can afford to buy homes. And I think that this is a very underappreciated and an under-researched thing at the moment. And I've shown this report before. This is by UniCredit, and I won't go into it, I won't cover all the pages right now, but I can show you the conclusion. So the sterling reapproached, won't cover that. So nonetheless, the GDP picture remains bearish, especially looking into 2025. Stretched public finances and self-imposed fiscal rules leave very little room for action on the fiscal front. So feel free to print screen this. As I said, I've already shown it before. But yeah, you can use that if you want. So my theory is essentially we can come back down to sort of these lows in April, which isn't a huge target to have. We could potentially even come down lower to sort of the lows down here from October 23. But this is a trade I'm planning after the Fed cuts. So possibly December to January, and then I'll be holding this position throughout the year and adding on and sort of just letting it go. But yeah, looking for this double top, looking for obviously the test of this sort of resistance, the failure, a retest here, which is where I would look to enter a continuation to the downside, and then obviously some reactions around previous structure. But yeah, that's the plan essentially. Are you mostly a price action trader plus fundamentals, or do you believe in Elliott waves analysis as well? No, Elliott waves. I've never ever, and this could be wrong. I could be proven wrong, but I've never seen a profitable Elliott wave trader. And I'm sure there are probably some out there. It's just I've not seen any. So I trade very basic technicals. I mean, you can see here it's just a resistance level. I also use the Fibonacci a lot and some indicators and things, but that's about it. It's nothing complex. It's more just all these things, all these small things on the chart just help find levels where buying and selling interest could come in to then enter into the direction that I see is valid. GP USD on the daily. To be honest, I don't see any reason it couldn't head any higher. However, if we look at the dollar, it's actually gaining some strength. So we can go down to the H4. So we do have this level of support, and the major sort of support at 104 has been broken, but there is a sort of less relevant support here. You can see it's being used as support. We did have a wick down here, some area around here where buying came into the markets. So I am sort of using this as my last level of support on the dollar to back up some of my open positions like the EU short. And this could potentially then, if this support does hold, we could then, of course, see the pound dollar start heading to the downside. However, just for the next sort of couple of weeks to months, like I said, we do have the US rate cuts coming in, so it wouldn't surprise me if we do start heading higher on euro dollar. In terms of targets, I see this high as being like the first serious target to have, and if we do break that, then we can come back and reconsider where we could go from there. So if there's any other questions, let me know. Let me see what's on the watch list. In terms of gold, I'm sure you guys have already discussed gold with Nick and the other guests, but I can give you my 2 cents. So I think gold is very, very tricky at the moment. I think it's essentially a trap for a lot of traders. I don't mean that literally. Obviously, I'm not saying there's market makers out there that are trying to trap you in gold. I just mean psychologically, gold is trapping people at the moment. So this is a very, very typical thing that a lot of newer traders and a lot of retail tend to look for, which is, where's my pen tool brush here? So here we've had clearly a break of the previous high. I don't think it takes a genius to realize that. So that's fine. That, no issue there. However, we will have two types of people now. It's people trying to buy gold because it broke previous highs and, it's a steam train, continue this run. Then we also have other people saying, oh, we've just had a bearish daily candle, just broken above daily highs. We need to sell. It's a liquidity sweep. It's a false breakout, whatever, sell, sell, sell. Now, I think both of these people are at risk of getting liquidated. And it's not necessarily because their ideas are wrong. It's just because gold could go either way. Now, gold is obviously a risk aversion asset. Overall, on the sort of long front of the long term, I am bullish on gold. I don't have any reason really that we couldn't go higher. However, just due to natural market movements, how the markets tend to sway, I do believe we could see some potential bearish movements coming into gold. And when I say that, I don't mean we're going to drop off a cliff. I just mean we could see some sort of correction, whether it's just down into sort of halfway of this range and then a continuation up. I don't know. I don't want to try and forecast this because I can guarantee whatever I say on gold, it's going to do the opposite right now because I've been trying to get in on this range and it's just not worked. So I think I've been jinxing myself on gold the past sort of couple of weeks, but this is just my 2 cents for now, is if you're not in gold, stay out until you see something a lot more credible that's worth getting in for. Can never discuss gold enough. Yeah, fair enough. I took the told sell and you said not a good idea. I'm in profit and the SL break even and took partial profits. Then I'll look for a buy. Do you mean on gold? Gold always breaks the structure, reverses, and then goes back in the trend. So if gold always does that, I will give you $50,000 and I expect to have 150,000 back by next year. If you know that gold always does something 100% of the time, you should be a multi-trillionaire. James, how about Euro Australian? Appreciate the insight. No problem at all. So we were bearish on this actually for quite some time. However, I'm just not totally sold right now. My entry criteria got essentially blasted through and it kind of just eliminated my idea here. But yeah, the initial idea that I was looking for was we traded this to the downside and then we ended up taking profits. But sorry, 1 second, guys. I'm getting a phone call. Okay. So yeah, I was looking to get in again, and this was a really, really, really great entry. So we had obviously the fib low to high, this golden zone, so the 0.618 and the 0.5 level was, it formed this really nice level of resistance. We had the 200 moving average, we had the RSI, and I was really looking to get in around here, but we didn't have a bearish candle close, so luckily I avoided the loss. So I just kind of put this on the sidelines. However, I do still like it. I still think the Australian dollar is very strong. I'm not overly confident on the euro either, which is, again, one of the reasons I'm selling it at the moment. We have respected this level of structure, so it does look quite nice to the downside. But I think if you're not already in this trade, then you have possibly missed it. So I'd be looking for a continuation to downside and then a correction and then potentially enter to the short side. But it depends. Again, this is a good example actually of people see different things. So I still see this as a bearish market because we respected this level, and I see different things. But then someone else may say, okay, well, we've broken past these previous highs. This could now be a break and retest, and we go higher. So this is one of the reasons technicals are very. It's very difficult to just be a technical trader, because it's very, very objective. The way you see the markets one way, someone else might see the completely different thing. So that's one of the reasons I like to have at least a very vague outlook on economics, to know, at least if I'm buying into the right direction or selling in the right direction. Hi, James. What's your take on pound Australian? So actually this looks... well, sorry, not looks like, but this could be a very, very good trade to the short side. So as I said earlier, I'm very bearish on the pound, and I think the Australian dollar is doing very healthy, or it's very strong. We've just respected this level of resistance. So actually, if we get a bearish close on the daily, I might consider this one to the short side, but I'd have to do some research, so don't take my word for that. I might not enter this one. But yeah, I think generally speaking, looks good to go lower. Let's see the weekly time frame. Yeah, I quite like this to the short side. We can see we've had quite a lot of sellers sort of rejecting this, rejecting price going higher. Sorry, someone keeps calling me, keeps popping up, so a bit frustrating. So yeah, that's my outlook there. Hi James, keep up the great work. I'm long on AUD CAD. Your thoughts? Thank you, Asad. I appreciate it. We can definitely take a look. Yeah, so I am looking to go long as well. The Canadian dollar's been pretty poor recently, actually. If if we look at any of the Canadian assets or Canadian pairs, a lot of them are quite bullish, obviously, because the Canadian dollar is quite weak. So we broke out of this really nice level of sort of resistance. I mean, it wasn't that strong back here. However, it's recently been used to support. So I'm just looking for this level to get hit again, and then a continuation to the upside. But to be honest, I'm not sure if we will get this level of support hit, because it's already been touched. This, the break and retest I normally talk about has technically already happened. So yeah, it may from here just continue to the upside. So if you're already long on the Australian Canadian, I don't see any reason to close out. I think that you're on the right side. Looks good to me. But keep in mind, guys, that I'm not a financial advisor. So anything you do, it's not my fault. If you lose money, that's on you. Manage your own trades. Just a little disclaimer there. So US dollar CAD. Hello, James. What's your take on euro dollar? We've just covered euro dollar. If you can rewind the stream, you'll see my take on the euro dollar there. So USD CAD, I don't like it for swing trades. I think it's too choppy. If you look, it's just a sound wave. So your dollar CAD for me is more of a sort of intraday asset. And this looks quite nice, so I'll cover this one on a smaller time frame because that's just how I would approach it. So again, very simple break and retest off this level of sort of previous resistance, now turned support. The moving averages are bullish. I would be looking for a pullback at some point just because the RSI is about to become overbought. Let's see higher time frames. Yeah, I think generally speaking, it looks quite good to the long side, but we can see what EDGEFINDER thinks, if there's any data on there that we can use. Yeah, okay, so that EDGEFINDER backs it up as well. We are bullish on this one with a score of 5. So we can see retail's short, COT's pretty flat, seasonality's bearish, trend reading, GDP, retail sales, employment change, and interest rates are in our favor, which is good. So yeah, overall, I don't think a long position looks too bad. However, technically, it's just not for me. You know, how on earth would you go about finding an entry on this? It's a bit of a mess. You know, we're kind of in the middle of this chop here. So yeah, for me, it's just too messy to get in. But yeah, we'll see. Damn, I was short Euro New Zealand since Asian session and closed it before Euro interest rate. Now it's melting. Let's see. Yeah, I suppose I assumed that you were scalping it because yeah, it doesn't look like too much of a move on the H4. But yeah, I am looking to go long on the Euro New Zealand at some point, but it's just not providing any entries. I mean, it's just a rocket ship to the upside at the moment. So I think my initial entry level right here has been sort of obliterated. I don't think that's a realistic target anymore. So maybe next long target or entry should be around this level here. Let's see. Interesting. So potentially a slightly lower entry around here just to respect the fib, take profits up here. So that, yeah, this is essentially my take on Euro New Zealand, but this isn't a trade that I am really waiting to get into. It's more a trade if my alert gets pinged, I'll enter and see what happens, but I'm not too interested in it really. I'd trade it more from a technical front. I also don't really like the New Zealand dollar. I think it's a bit of a poor currency at the moment. And even though I'm bearish on the euro, I think it's still stronger than New Zealand. So that's cool. Let me just check something quickly. Okay, cool. Next guest is on in 5 minutes by the looks of it. So if you've got any final questions for me, guys, let me know. I'll be happy to answer. But yeah, I don't think there's much else for me to discuss. Still in this dollar Mexican peso trade, which has been a bit painful. It's one of those trades. It's just up and down in drawdown. You know, we had this initial move, and this is actually a good lesson for a lot of people. If your trade looks good from whatever standpoint you take your trade, or whatever reason you take a trade, if it's still valid, there's no reason to close it out. Unless, you know, you've risked too much or the theory changes or whatever it may be. But generally speaking, you know, we were heading to stop loss pretty quickly. You know, this was quite an aggressive move. And then suddenly we just get this huge candle to the upside, bringing us back to essentially break even. Then we come back down, heading towards stop loss very quickly. And now we're back to essentially break even. So it's just one of those trades that's very difficult to sort of sit through, but it's part of the job. So we do. Would you swing by gold? Absolutely not. I can go back to gold very quickly, but yeah, I've got no interest in trading gold at the minute. The way I see gold is if you weren't in gold sort of from anywhere around this level here at the bottom of this range, if you missed that entry, then you've kind of missed the move. And that's speaking from a swing trading perspective. Obviously, if you're a scalper, then maybe, you know, I'm not a scalper, so I can't speak on behalf of that. But yeah, if you're a long-term trader, then we've kind of already missed this gold move, unfortunately. How much profit are you in this week? I'm not. I'm actually in a loss this month. So my euro positions took me out. So what I can do. Now, I know this isn't a MyFX book, but I use IG Markets. I use spread betting that doesn't connect to MyFX book. So I use this because I also have investors and things. So I send this out every month. But you can see last month I made just over £400. So very small gain, really. This month was very flat until I liquidated my euro dollar positions, which I showed you that earlier. This was a £1,000 loss. However, it is what it is. No, it's managed risk for the account. The account balance can more than handle it. This was quite conservative considering the way I was trading it. So it is what it is. So yeah, this month, personally in a loss. However, I'm not sure about elite traders. I think elite traders in general is doing fine. What's the longest you've been in a trade? That's a good question. I don't know. I think off the top of my head, not that long. I think it was probably 4 months, which was actually a Jet 2 position, which is on the London Stock Exchange. But yeah, I think that's about it. I'm not really a fan of holding trades too long. Normally, they're not my trades. I normally get long-term sort of position trades from my friend in London or one of my elite traders. So yeah. So yeah, Nat Gas is pulling back. It would be nice to get another entry on Nat Gas. Essentially, just looking for a 50% move back, which would take us into sort of this level of previous support. And again, this would just present a potential break and retest, and then an addition to the downside. So when I'm trading like this and looking for scale ins, I'm not going to have 2% risk or 4% risk just sat here for no reason. So when I do scale in, the initial position is moved to break even. Then the next position is added in with lower risk. So lower risk for me is sort of 1 to 0.5%. And then we let that go. Just let me catch up with the chat really quick. I think I might have missed some messages. Good to know that even experienced like you goes into drawdown. It's somehow helping. Yeah, everyone's in draw. Anyone that says they don't have a losing period, they don't have a large loss now and again. I mean, obviously not everyone has a large loss. It depends how their risk models and things, but everyone loses. There was a professional trader, I can't remember his name, but if you Google it, you'll find it. There was a professional trader on trading floors. He had a losing year. I think he lost about 12%, which obviously to me, you and I, it might not sound like much, but in the professional industry, that's a lot. He had a losing year and he was a great trader. Just because, you might be profitable over the space of 10 years doesn't mean you can't just have a really bad year. Or even a bad month, bad week, bad day, doesn't matter. It happens. And anyone that says it doesn't is lying. James, I'm long Bitcoin as in a trade from 57K. What do you think about that? I can give you a very quick technical thing. I'm not sure. I think I might be running over my time here. But Bitcoin, I find it very difficult because I'm not a crypto trader. I don't know really anything about it. Although, to be honest, I think buying Bitcoin is good. It's essentially the same as sort of the indices markets, in which it more just seems to drift to the upside overall. So I'm happy to just be sort of buying Bitcoin. Although I don't, but if I did, if I did trade Bitcoin, I'd be more looking just to go in buys. Can GJ go up if we have higher high? If we have a higher high, it already has gone up, Zeta. But yeah, guys, I think from the timesheet on the EDGEFINDER, I think my time is up. So I appreciate all you guys. You always a very nice chat to talk to. Do you have a trading journal you can share to track performance consistently? Something simple. Yes, I do. If you want to reach out to me on Twitter or Discord or whatever, feel free to. I can send you something. So yeah, thank you guys. I will talk to you very, very soon. Hopefully I'll be back on this channel eventually. So have a good day. I'll see you soon.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, happy Thursday. Welcome back. It's 10 o'clock. This is Chris Pulver here. How's everybody doing today? Just finished up a live session for my Flex trading room. did a little daily sell trade on the SPX around 5,600. We'll keep an eye on that one for the next maybe 30 to 45 minutes and see if I can get that theta decay, grab a few bucks out of this. I'm looking for a $40 profit, or about 40 cents per contract. And I'm also looking at a 562 out of the money based on a little gamma level that I have. So I'm staring at this 562 right here, which I'm looking at the current net position starts to fill up a little bit more. This started out this morning around 1,000 net. Now it's around 1423. So I paid 80 cents for a debit. I'm just looking to see if we will squeeze up there, try to find, 562. If that is the case, an at the money call option will probably be paying closer to like $2 or so. I can show you right here on my platform. Another all-time watermark high for the portfolio for the year, which is pretty solid. This is good. We'll see what's really running. I've got some Pfizer trades looking pretty solid. Big P&L on the day. Let's keep an eye on things. So no complaints on my end. This little rotation has been pretty favorable. The market's even being somewhat mixed. We've had a pullback on the Qs and semiconductors. We've had a pause, I would say, on the S&P. But I'm, maintaining some pretty good positions with a lot of options. That's, time works in my favor. Some directional plays, but I've got some pretty nice P&L that's rolling in today. Also on Pfizer, we're at $30.50. I'm looking to see if this gets called away by Friday. I doubt we're getting above $32, but that's a pretty good price target for right now. All right, let's see what else we have. I have Netflix earnings coming out today after market. We're back up to 650. I did take a look this morning in my trading room. Domino's Pizza. Frank and I talked about this one earlier in the week. DPZ. It got absolutely smoked with a tiny little miss in revenue by 0.5%. I mean, maybe that's not tiny, but it's not 1%. It's not a big surprise of 10%. I mean, it beat earnings per shares by 9.38%, missed in revenue, and the thing tanked $60. But taking a look at this on the technicals, if you just connect some lows, it's sitting right at that trend line. So is this it looks like we're aggressively trying to fill the gap from an open around 410, 411. I'm not chasing that or anything, but I just thought it was interesting because the trade we were looking at taking was a credit spread, and the 460 by 465 was the bear call spread. So that trade right now, this would have been filled for about $7 or $7 and change, anywhere between $3.50 and $3.75. So we'll say that this would have been about a $7 credit had you taken the trade with us on, I think we talked about this on Monday, possibly Monday. So let me just evaluate the price right now. This would have been a 7/26 expiration, DPZ right there. Trade, this would out to next Friday. The bear call spread was a 460 by 465. Yes. So 460 by 465 was a bear call. And then the bull put was a 515 by 510. 515 by 510 there. So what started out at a $7 credit is now trading for $4.79. This is exactly how the mechanics of the trade work. So you're in for $7.50 credit up front. Right now it's trading for $4.80. You just made $2.70 profit. Okay. Now as a percentage, you just turned that position to a 38% winner. It's pretty good, right? Did the trade cost you an arm and a leg? No, it cost you like $250 to $300 buying power, right? So that's how this stuff works. I keep emphasizing this, and I want to talk about this a little bit more yesterday. I asked, Nick when I was on the show, hey, just give me 5 minutes to talk about options. Maybe it's more helpful to talk about this in relation to a currency. How many of you out there are in a drawdown with a currency pair right now? And if so, what currency pair is it? I probably have a lot of traders that are stuck in yen crosses. I might have some traders that are stuck in some dollar crosses. Just let me know, because I just want to share, if I could trade options on currencies, my life would be a lot easier. Drawdowns that I experienced in 2020 when I had to hedge my way out of some yen crosses, life would have been a lot easier if I was just in some option trades. Yoshi's in gold. Okay. I see that US Airlines had earnings. Okay. Let's take a look. Is it good or bad? UAL. Let's go United Airlines here. So not a huge move. I mean, I'm looking at this from a technical side. We're still stuck right in the middle of all this chop. If we take a quick look at airlines, Delta has been pulling back. I'm looking to see. I mean, maybe I'm asking too much here, but I'm looking to see if we can get a pullback around $30, and I can just kind of buy the range on Delta. That's about it. I wouldn't really want to jump in and buy this too high. You know, the same thing is true on something like Royal Caribbean. RCL is sitting here at these crazy all-time highs. I want to short this stock, but it just seems to do really, really well for right now. This is another one with earnings coming out next week. This will be a big kind of make or break given the price point, given this appreciation. Man, I was happy with RCL when I bought it post-COVID. That worked out pretty well to fill the gap. I was looking for a double bottom. I should have just freaking got in, you know, like kind of dollar cost average. But, you know, this is $20 different. So for me to say like, oh, I should, it's like, well, precision wise, $20 off on a stock price is a big difference, especially when the low is 20 and it actually bottomed around like 39. That's not catching the bottom. You know, I mean, that low's around $31. The low here is around $20. So if I'm looking for some precision, I wanted to come back to $20. It didn't do that. But the sheer appreciation from $30 up to 160, who doesn't like a 5x return? You know, everybody does. Okay. So I see Yoshi's in gold. All right. So let's talk dollar Swiss. Okay. I'll do a little weather report like I typically do. Gold is sitting near the all-time high. So we've had a bit of a pause from Tuesday. Yesterday's indecision on gold. Today indecision on gold. Tuesday was a nice little push to the upside as the markets were ripping higher. Right now we're noticing, okay, SPY's up about 0.4%. E-mini futures on the S&P up 0.2%. NASDAQ up 0.2. NASDAQ futures up 0.3. Q's up 0.5%. Dow is up a little bit. IWM is also, look at this IWM, just kicking some booty. Get up there to some fresh highs, would you? All right. Let's go gold. I want to talk about it like kind of an option trade on dollar Swiss. So Zen's asking, dollar Swiss still long? I'm still long. I'm long Aussie Swiss and CAD Swiss and Euro Swiss and Pound Swiss and New Zealand Swiss and dollar Swiss. I'll share what I'm doing on it. I've got more positions pending on the dollar Swiss and levels to look to add into, but I'll talk about that in just a moment. So I guess the outlook is, what do you want to do on gold? What do you want to do on gold? You want to be long? And if so, how do you want to be long? I mean, obviously, if you want to put out the capital, this is my example yesterday. If you bought GLD, it's going to cost you $22,000 cash. If you have a margin account, it's going to cost you $11,000 cash, right? So that's fine. I mean, your return on capital, if gold is up, the one thing that's nice about owning the shares is time doesn't matter. You can hold it forever, okay? If you're in options, time is a factor. So if you're a seller of options, time works in your favor, okay? If you're a buyer of options, time doesn't necessarily work in your favor. You need price to go directionally. If you're typically buying options, you need price to go directionally within a window that you're trading, okay? If you're getting extra time in the trade, that's called extrinsic value. If you're getting extra direction in the trade, that's called intrinsic value. That's the actual value of the option. So as an example, let's use dollar Swiss as a currency. I just want to share this because if anybody is, let's say you followed me for the last couple of years in my trading room, and I was a very big advocate for going long the dollar Swiss, okay? So I was patiently waiting for this trend line to break. I was looking to see when I had some oversold conditions, I was looking to buy. So I did establish some buy positions in here. I had a nice little gain. I treated this initially, just look at this area right here. I treated this initially as that was a sign of a bullish pattern. So I started to scale myself in. So I had a buy trade in off these lows. And then I put a fib on from this low to high. And I had a 382, had a 618, had some pullbacks, bought again at the lows. So I probably just on this little setup, I had 1, 2, 3, 4 entries. And you're looking at this like 4 entries and it took out the lows. Did you get stopped out? No, I did not. Why? Because I'm long on this. Why? Because this is my pocket and pivot target that I want to trade back to. So I'm carrying this as kind of my core position. All right. Now, let's say that in this dollar Swiss. Okay, like right now, for example, if we just go to current price, so I'm in probably close to 20 entries on the dollar Swiss long. Okay, so order here 382618, bought the bottoms again, look for a trend line break, bought some more, added on the right hand side of the trend line, tried to get profit back up here. This is still my profit target. So I've been adding through this run, and I'm looking to add more on even a correction. Now, what I currently see on this pattern is potentially this high. To me, this is a longer term head and shoulders. Okay. And so what I see is this area that we're experiencing right now is a correction in this dollar Swiss that could come all the way back down to find some symmetry around 8,600. All right. So if we come to 8,600, I'm looking for a bullish pattern to emerge, and I'm going to measure. Okay. And look, if you want to make a note of this recording, take a screenshot of my chart, copy this idea. I do this all the time in my trading. If I see this chart right here and I measure a low to a high, okay, all I'm going to do is project the symmetry from there. So let's say that we are going to pull back all the way to 85.50. Okay, let's say we pull all the way back to 85.50. So let me drag this over here. All right. So what I would be measuring would be this. This is my low. This is my high. If we come back to this kind of perfect symmetry where this is my left shoulder and we find this over here with the right shoulder, my projected symmetry for my profit target is at 94. Everybody see how I did that? So I've got a low to high swing, a higher low to higher high swing, and that would be profit target 1. Okay, now if this is going to be a 5-wave move, this would be wave 1, this would be wave 2, this would be wave 3, this would be wave 4, and this would be wave 5. It still gets to my profit target that I'm looking at in the bigger picture. But for me to add to some of my winning positions, and this is on my YouTube channel, I have a bunch of these videos called Trading 101, Keep It Seriously Simple. I have a lot of videos that talk about this stuff, just how I've traded over the years. Okay, symmetry is a big deal. If anybody's familiar with Fibonacci's, this is my favorite Fibonacci. Okay, A to B equals C to D. So whatever move I have here, pull back, push. That's my profit target. So I measure this move and I project that move. And that gives me a really consistent way to make profit. Okay. I like how somebody says, dude, it's a double top. Well, is it a double top at 30-year lows? I mean, if you want to be a seller into 30-year lows, then be my guest. That's not me. Okay. When we come into 30-year lows, I'm way more interested in buying. So we'll see how it plays out. But 94.50, target 1, filling in this pocket, 96 to 97, target 2, all the way back up to range highs, 1.00. Okay, so you can use leverage in Forex, right? If you wanted to trade options, here's a good example. I could do this. Right now at 88.47, let's say we could trade options around this currency pair. Well, I could say, you know what? I think that price won't go below let's say 8,400. Okay, so let's just treat this like an option. Okay, I'm just using this as an example. If I put a naked put at 8,400 and I could collect, let's say, $1 credit, this is what it would mean in the options world. Okay, so $1 credit means that if price for the duration of my trade, as long as price stays above 8,400, I'm going to make $1 per contract. Okay. So 8,400 would be my line in the sand. So if price comes down towards it, but doesn't break it, I'll still keep my $1 credit. And I can sit on this trade for 30 days, 45 days, 60 days, 90 days, whatever duration I want. All right. If price were to come down through 8,400 and I decided, you know what, it's at a low enough price point, I decided that 8,400 support, if I wanted to own shares, if I could own shares of this particular asset, then I could own it at 8,400 and also subtract my credit. So I could actually own it cheaper and then take it at a position where I'm like, I want to buy it there anyway. That's what this put would be for, right? And if I'm right, price can go down and I can still make money. Price can go sideways and I can make money. Price can go up, I can make money. Price can go up, I can make money. That would be an option play if this was, a currency pair I could trade options on, or whatever asset it is. I'm putting a trade on where if I wanted to own it, I'd own it down there. If I want to collect some credit, there's 4 out of 5 ways I can make money, right? If you want to be a little bit tighter, if you think this is closer to the bottom, okay, then you can start putting in some credit spreads here where you sell a put, buy a put. If price goes against you, your risk is defined. If price goes in your favor, you're making profit, probably 50 cents on the dollar. Okay. If price is showing more signs of bullishness, well, you can do more credit spreads here for income. You can sell more options there, or you can get long on the option and then trade the direction. A lot of times when we see 3-wave moves, 1, 2, 3, 3 waves are pretty aggressive. Directionally, if I went out, let's say 45, 60 days, 90 days, 120 days, if I get it right directionally, I'm paying for the time, yes, but I'm getting the credit to go in my favor if I'm right directionally. So my point is, and here's a good example that I've done the last couple of years when traders want to understand, options. I use an example of what I experienced in 2022. Okay. Here's a fun story for 2022. I had what I thought to be a pretty good technical trade. Okay. When the dollar yen started to break this level here on this little ascending wedge, I was waiting to see it get overextended, and we got into like 130. All right. So we went from 115 to 130, went up 1,500 pips. And technically, you see all this stuff here. This is on my daily time frame. I had an overbought condition. I had a really extreme bar count. And technically, I was looking for a sell trade. Okay. I sold the dollar yen around 130 and sat on that stupid piece of crap until 150. Now, I didn't just sit on it for a $2,000 or a 2,000 pip drawdown. I stopped myself out, got back in, stopped myself out, got back in. But at the same time, I realized, like, look, I'm clearly missing the fundamental move here. So I was hedging with Aussie yen long. I was hedging with Euro yen long, and it helped mitigate some of the nastiness. But here's an easy trade. Had I started my trade here instead of selling in Forex and getting beat up by 1,000 pips at a time, if I had an option position and I could just do a bear call spread and price went against me, 2 things happen. 1, if I define my risk, I just take a loss and I'm done. Okay. 2, if I had a long enough duration on this trade, I could ride the losing side of that trade all the way up to these highs and then take ownership and sell this thing at a price that is way higher. Okay. So that would be if I sold a call here, bought a call here, that long call is crazy profitable while the sell call sucks. But I can hedge that position because I'm long on this instrument as well. Right? So I just want to go back to what I talked about yesterday for 5 minutes. If I had anybody following me and you want to give me like a month of your time, or you want to do a one-on-one session with me, if you're interested in any way of trading futures or trading options, improving your stock portfolio, I promise you that if I can turn the light bulb on for you for options trading, it will change the way you trade. You will go from a 2-dimensional trader to probably a 3 or 4-dimensional trader. It does broaden your horizons quite a bit. Okay. I know the language is weird. I know it seems intimidating. There might be sessions that I run here with A1 Trading, and when I'm on with Frank and we talk about stuff and people are like, what are they talking about? It's not that difficult, right? It's a little bit of addition and subtraction and just knowing some terminology. That's really all it is. Okay. So anyway, that's it. Let's get some crosses. Let's get some symbols here. We're up to 559 right now in the SPY. I'm just going to keep an eye on this one to see if I get up towards 560 and change to fill the gap. Maybe 561, 62 to hit my gamma squeeze level. So the SPY today is. So we've had some pretty serious questions in the markets as semiconductors were hit hard yesterday. The Russell is. It's fading a little bit, but we'll talk through the instruments here. So we've mentioned pretty firmly that the market is bullish until it's not, or the market might seem and feel like it should be bearish, but it's not yet. Okay, but if we start to see, and this is a price level that I'm watching pretty carefully. Okay, so if we break 555 or 554, that's a decent floor on this SPY that would, justify, like, if we're going to have a dip, just take a look at the charts here. We have trendline support, Could we correct a little bit? Sure. We have a high, we have a low. We could come back into the middle, have a bit of that dead cat bounce. If the bears are going to fade this rally, and fade these all-time highs, okay, but where to? Right? Is it just a little correction in here to find trend line support and then the market picks it right back up again? Or are we about to see something a little bit more threatening? If we go into here and it starts to unfold a little bit more, this is the area that I don't necessarily want to see breached. If we hit 542, let me check here on the left-hand side. Okay, so 542 is my floor. I mean, the last major level of resistance was here. Okay, so if we come all the way back down to 542, could this be a bit of a bear trap? Possibly. And that would be a pullback, but it'd still be single digits. If we came to 542, I'm pretty sure that's like maybe 5%. Yeah, that's a 4% correction. Healthy. It'd be fine, right? April, we had a 6% correction. NASDAQ, we had an 8% correction. Just in the last week of trading, 2 weeks of trading, the Qs have been down almost 5%, and the S&P's down just a couple of percent, right? So we had from high to low pullback around 1.46. I mean, that's nothing, So it's like there's nothing about this. It's like, oh my gosh, the sky is falling and the market's going to tank. Not necessarily. I think what we saw yesterday was pretty eye-opening where, okay, the market thinks that Trump is going to be president. The market thinks a high probability that the Fed is going to be cutting rates. These could all be good things to spur on this continuation of the bull market and finish the year at all-time highs and everyone's happy. But look at the news that happened yesterday with Trump talking about Taiwan. Okay, now all of a sudden the market's like, oh crap, are we going to have a trade war? Are we gonna have terrible geopolitical relationships out there? Maybe. All these things were like buried under the surface that were still there, right? Optically, it's like we've never had a awesome relationship with China, even though I really think they need us, we need them, and we'll keep it adversarial or make it sound like it. But in the end of the day, we're the biggest consumer, they're the biggest producer. And it's been like that for a long time. I don't see that necessarily changing. But if we have a trade war, who knows, So anyway, point is, we've had a 1.5% correction on the SPY. It's not bearish yet. Okay. What has to be a break? Well, if we break below 555, okay, fine. We're taking out some recent lows. That would be like last week's low. And that's what I'm watching for. Right. So right now, what's interesting, we're red on the week. Okay. If we get back into here, we started the week right there. If somehow we get back into this gap again, I mean, the gap is way the heck up here. This is a large gap to fill. So this market could make a decent attempt to fill the gap, right? And we could essentially go nowhere for the week because we started right here. We could end right there. And I think that 562 maybe has some merit going into tomorrow. But as we go into this week, this is one thing I said on Monday. Monday's trading broke the all-time highs. The probability is we're probably not taking out the lows for the week. So if this is a high to low and the market's going to spend, today and tomorrow kind of chopping around, maybe Friday is a little bit of a correction back in to fill the gap. And then we have another watch the high, watch the low type scenario. Make sense? So that's what I'm looking for. SPY hasn't broken any floors yet. NASDAQ looks a little bit more ominous, but here's another trend line, right? Trend line support, trend line support. We've had a correction. We haven't broken this floor. We haven't filled any gaps yet. So I am wondering, and this is what I kind of like to see personally. I'd like to see the Qs head down a little bit lower, come into this trend line, come in to kind of fill this gap and see if that's the area that this market can pick itself up. Now, I personally like the rotation that's happening with small cap catching up faster and making a pretty big rip. I like the Dow as a price weighted index going higher and kind of not necessarily outperforming, but stabilizing right now versus the Qs are a little bit more volatile. Speaking of Qs being volatile, let me look and see can I get an NQ trade on right now? Let me look at an MQ trade right now and see what this is going to look like. If I went out maybe towards the end of August, I'll go out 43 days. Okay. And let's see here. I'm curious. I might do an MNQ as a micro futures, but I might do a trade here where we're trading at around 20,000. If I did, let's say let me put this at it's usually like a 25 delta for that kind of outlier move. I mean, it's beyond a 1 standard deviation. So if I bought the 19,200, so I buy the 19,200. and I sell the 19,100, that's not bad for a debit spread. I would be buying the 19.2. I'd be selling the 19.1. That would be a max profit of around 1,600. Now, on top of that, let me see if I went down to where's a price level that's just ridiculously low. Let me go to NQ. And the reason why I'm even looking at this is because the recent sell-off has jumped up the IV rank. So I should be able to be a seller of options and generate a little bit more premium out of the NQ. So what level would I look at? I want to see if this was all the way down here towards like 17,200. Let me see what that price point is. So I need to cover a $20 debit at 17.2. Easy. I mean, heck, I can go all the way down here towards 16.5. Let's see here. So I'm looking for about $40. So I can go 17.5. I'd like to go closer to like 17,000. Let me see what 17,000 is. 17,000 would be 29. That covers. Okay. So right there. So $10 credit. See if I can take a stab here. So $10 credit should be about $500. Yep. So $10 credit with the futures contract. There should be about $500 on the credit side. If I wanted to take a profit target, I'd look at something to the tune of, maybe $100 to $200 out of the trade. The thing I don't love about this is it does tie up a bit of capital. Looking at my option buying power here. See, 915. Okay, so I've got some portfolio margin. So that one, I just had some of these approved. So a portfolio margin here, portfolio margin here. Got a lot more option buying power. So I think on those accounts, I'm going to take this trade. And I mean, everyone can take this trade. We're okay. This trade's out for 43 days. I'm going to see if I can get $10 credit. $10 credit. My line in the sand is 17,000, which is way down here. We'd have to see the NASDAQ tumble another, 15%, more than that, 15% to the downside. So what I'd be building would be this kind of bear trap scenario where I can have this big profit target, and then my line in the sand is down here. So over the next 43 days, is this NASDAQ going to drop, 15%? Anything's possible, but I would say likely not. So I'm going to try to generate some income on this trade. All right. Is it FOMC today? No. FOMC is going to be at the end of the month. It's going to be the 31st. All right. So I'm going to try to take this trade for 10 and change. Let me try 10.25. So 10.25 not filling. Let's go 10.10. Got to be 25-cent increments. All right, let's try to get $10 then. $10. Come on, man. Not filling at $10. Why not? All right, I'll try one more at 9.50, and then that's it. If it doesn't get filled, then I'll cancel the trade. All right, filled at 9.50. Okay, let's go 9.732. I'm going to get this. So this is the trade I'm going to take. I'm going to get these accounts filled. Uh, 7634. I'm going to check on these margin accounts versus IRA accounts. Yeah, $9,000 in buying power. No thanks. So I'll go back to this other one for a margin account. 9151. There we go. Okay, so that'll be in. Let me get this in my trade tracker. So this is an NQ position, bit of a bear trap. All right, so this is NQ. And the expiration is 8/30/24. So I have a 19/200 by 19/100 bear put spread. And that was around $20 debit. And then the 17,000 put for around $30 credit. So my net position was filled for $950 credit. So I've got $450 max profit. I have a bear trap of $1,000. Let me look at the contents of that trade again. So I've got a max profit of around $2,200 if we're in between my levels, and I'm taking up about 40. So I'm looking for a return. If I get $450, I'm looking at about a 10% return on my buying power. Okay. So what I'm going to watch for is, number one, I've got time on my side here. Going to get some theta decay. If the Qs respond and they start to stabilize a little bit, like we might drift a little bit lower. That brings that bear trap into play. So I have a 19.2 by 19.1. That bear trap is in here. So 19.2 down to this level. This is my bear trap, all the way down here to 17,000. There. So that's a bear trap. Okay. And there we go. All right. Back to the stream. Okay. So that's a trade I just put on here. Dow, Russell, hanging in there. VIX, we still haven't made a meaningful move to the upside. I'm looking to see if the VIX can get us up into the high teens, maybe poke $20 if something gets a little gnarlier to the downside. Dollar index, you got to keep a close eye on this dollar index. This thing's been tricky all year, my opinion. Dollar index, if we hold this 103.90 level or hold this 104 support, then I think that the dollar may be range bound and still range bound. It's making some lower highs, it's making some equal lows. I think the dollar is a difficult trade right now. I'm not opposed to seeing more downside on the dollar, but I just think that confirmation isn't quite there. Yes, we've had a little bit of a slide to the dollar, but if we hold this support level, I would hold off on any type of forced selling on the dollar crosses just in case it goes right back up. Okay. Now, with the Fed cutting rates, could the market price this in aggressively? And this could be, buy the rumor. Sure. The rumor would be the Fed's going to cut rates and the market's finally been waiting for it. And so the dollar gets hit really hard. 101 to 100, those are big key levels on the dollar index. But if we hold this support, this heads right back up. Watch the range. That's what I'm talking about. Okay. Mean reversion strategies for what asset, Kyle? What trade? What currency? What symbol? What are you looking to trade? Mean reversion is fine, but it totally depends on the asset. I don't like mean reversion in stocks. I don't love mean reversions in indexes. If you're trading currencies, trading crypto, trading things that are ridiculously overextended, maybe. But currency is probably better for mean reversion. If you have really extreme, RSI is overbought, oversold, there's divergence on higher time frames. I do a lot of that where I'm buying low and selling high. But I don't take it down to really small time frames. I'm not a mean reversion trader on tiny time frames. I want to see like big spaces and big turning points. Okay. All right. Oil. We have some news coming out of China. Like there could be a slowdown. Copper's been dropping a lot, which is the, copper's, they call it Dr. Copper because it's a PhD in economics. If copper is down, that's usually a bad sign for the economy, global economy. Copper's up, that's a good thing. Well, copper's dumped about 15% the last couple months. Oil, I still think oil's pretty well supported. $80 and $77.50. I'm long on oil with stop losses down below this low. So I'm looking for a swing trade on oil into here. Okay, gold and silver. Gold is up to some fresh highs. We're getting near to my, this is my measured symmetry around 50, 25, 24. I think a nice kind of capitulated number would be 3,000 if we're just going to see, gold is this super attractive thing. At the same time, and I've mentioned this when this first started to happen on gold, watch for this potential broadening pattern, right? Price might be a little bit sloppier, a little bit messier. So if and this, I don't want to see this necessarily, but if gold goes lower, to me, that's just a better level of accumulation to the downside to buy more. But I don't necessarily want to see it, I'd like to see it break and pause and then look more and more attractive as we go higher. And I like to see gold and silver both do pretty well. Okay, silver, underperforming compared to gold. Gold has been up and clipped some highs, and silver has not. So I still like the trade on silver, and I keep saying this, and I mean this. I like silver better than gold as far as the trade goes, because this move is still measured to around 35 and change. What's nice about this is I think this Friday I'm going to take some ownership on SLV. Looks like I'm going to take about 200 shares of SLV. My 29 and 28 puts could get assigned, and I think everyone's going to take on some SLV, which I'm totally good with. So let me go to SLV here. If I show SLV positions, where's it at? There it is. Okay, so I've got the 29, the 28. What else do I have here? So the 29876 puts right now, if you can see on my chart, it says ITM, that's in the money. That means that this could be assigned for me on the weekend. After this closes end of day Friday, I could walk into that'd be 2 and 2 is 400 shares. 400 shares with a break even of 28.50. Okay, now I'd still have credit on this, where I own the shares at 28.50, but net, I'm actually going to be owning the shares overall because I've collected additional premium. I'm collecting about $3.30. So I own it at 28.50, but I also have collected another $3.29 in contracts here. So I'd own it around $25. I'm actually taking an ownership price on SLV that's positive. So I could turn around and repair that right away, grab a few $100 and not take the ownership if I don't want it. But anyway, I like SLV. And then I think on my IRA accounts, silver IRA accounts, I have the 29. Here we go. I have the 29 and 28, which is fine. I'll take the same assignment. This will be a cash account for one contract. I'll take 200 shares at 28.50, and that would be collecting about $2.33. So I own the shares at 28.50 minus $2.33. I'm going to own it at like $26.20. So 28.50 minus 2.33. So I'm going to own SLV at 26.17. If I don't want to hang on to those shares, if I feel like it's allocating too much cash, then I can turn around and repair that pretty easily for, maybe $500 or $1,000 profit. And then I have a wide credit spread there, 23 by 15 out to December. All right. So SLV is fine. And overall, I still like this instrument. I mean, if we're going sideways here, so a nice little push. If we're going sideways, I'm just going to wait and see when this thing's ready to push again. So I still like it. If you go to XAU, like I have here, or XAG, is this a trend line break like I'm showing? Is this a low to high trend line break, and then we head back up to the highs again? Maybe we still maintain this kind of higher low. Okay, Bitcoin 64. I was looking for a Bitcoin opportunity. So number one, I talked about this as a bear trap that worked out perfectly. Now it's a low to high. Look for some type of swing, and then see if Bitcoin's going to head back to highs. I like Bitcoin to the upside. Ethereum, same type of thing. Really nice support level. Broke the trend line, pulling back or pausing here, looking for another upside to retest highs. Copper, this is a bit concerning. That aggressive drop in copper from these highs especially, this doesn't look good, right? Last time we had a big drop in copper like that, we're talking about 2022 when the markets were dumping. So, I mean, copper's going to have to stabilize right away, or else this gets a little bit nastier. Okay, now I am not going to do anything on copper right now in the middle of all this nonsense. What I'd rather do is look to see if we are in kind of this area, and I will trade copper futures. Okay, try to buy this thing nice and low. If we're noisy, like if we get noisy in here, but we still end up going higher, that's fine. I probably won't trade it. But if it comes down to a nice attractive support level, I will look to buy low. VIX crossing some fresh highs right now. Good. All right, we got the SPY selling off about $3, $4. I got to check my gamma levels here. Oh boy. Well, we're getting some levels to light up here to the down. Okay, so I do have an iron condor that I want to check on. If price is going to drop today, well, my 562 looks like I just wasted some money on a call option. But I have some hedges out there where I've got some bear traps, and I've got an iron condor with a 555 by 550. So if that works out, awesome. We'll keep an eye on this. One thing, okay, if we break this low, we are doing something that only happens about 12% of the time. Okay, so we tap the high and we tap the low. That happens about 12% of the time. Not a high probability, but obviously the markets do what they need or want. So we'll see. But I'm watching that floor. That low is 554 on the SPY. And, you know, in reality, I don't mind. Right now, like I am hedged on the VIX. Let me see if this thing is screaming up a little bit. We just had a fresh high. Okay, VIX is trading at 1490. We're starting to push up a little bit. I would not complain at all if we hit $16, $17, $18. I would love to see the VIX hit $20 because right now in my VIX position, right here, VIX position at 1495. I'm showing some daily P&L, but my 1050 call out to August 21st. You know, let's get a bit of a scare. Let's get this thing up. So right now, I'm about break even. I got in for a 450 debit, straight in for 435. I'm looking for basically intrinsic value. So if I'm long at 1050, right now this is kind of crappy here. Now that I see this, right, I'm in at 1050, okay, and we're trading at 1494. So what's 1494? Okay, or let's just say 1495 minus 1050. $4.45, right? So right now the mid price is trading exactly there. So that means that even though I have a little bit more time in the trade, I still have 33 days left of expiration on this trade. But I'm not getting any extrinsic value, which means I'm not getting paid for time, unfortunately. But the nice thing is almost tick for tick, if I'm at a 1050 call, I'm at a 99 delta, which means that for every dollar this thing goes up, I'm getting $1 in credit. So if we get to $16, $17, $18, I'm getting another $1 of credit there, which is good. So my goal was if we poke up to $20, I get $20, okay, minus 1050 is where my strike price is. That's a 950 trade, and I paid $4.50. So plus $5 is what I'm getting as a hedge. And I'm in 5 contracts, so 5 times 5, I get $2,500 of profit on a little bit of a hedge play. So it's about a 1% hedge. Okay, so anyway, I'm watching this. So we're tapping some fresh highs today. The only downside is this: if we are going up, right? If we're going up, then the stock market is likely going down. So are you prepared? Are you positioned? Are you able to hold or withstand a market fall, a market drawdown? Okay, I've spent a lot of time the last 30 days, especially kind of getting my portfolio prepped for this, where I can stomach and handle a lot of these potential drawdowns. Okay, I don't want a big one. I mean, if we pull back, 10%, that's a lot. I'm mostly positioned for that, but yeah, I don't love it. It's not going to be fun. It's going to be scary. You're going to be wondering, like, does the market buy the dip here? We don't know. Okay, but that's what's going on. All right, let's look at our Mag 7. Apple is down. Amazon is down. I am collared on this position, so I own the shares all the way down to like 130, by the way, and I'm collared with a like a 210 cover to a 180 put, and that 180 put started at 195. That's probably showing some value right now. I might have to take a look at that. Look, if we're going to drop a little bit more, I mean, let's find something to make it, protection worthy. So I'll see if I can lower my cost basis on Amazon, and then I'll still hold this thing. I'm hanging on Amazon for a while. This has been one of my better performers this year. I own the shares around 130 bucks. I was trying to get it called away around 210. Google also down a little bit. It's going to be interesting to see how eager buyers are to jump in and get the Mag 7 all over again. Netflix is down, or actually Netflix hasn't moved yet with earnings today. Meta's down, Microsoft down. I'm actually kind of happy to see these things dropping. Okay, NVIDIA 118, let's freaking go. NVIDIA, do your thing, drop to 110, drop to 100, give me something attractive. I've got a 126 on NVIDIA. So if NVIDIA gets down to 110 or 105 or 100, I've got some pretty good profit rolling on that. So in a way, I kind of hope that we do see more downside here over the next couple of weeks. I have an expiration out to the 2nd of August. Okay, and then Tesla at 250. Tesla's been pretty resilient. I saw an interesting newsprint this morning that Cybertrucks have outsold the F-150. Are you freaking kidding me, man? Isn't that like a $150,000 truck? Like, I guess we're selling more $150,000 trucks than we are, $40,000, $50,000, $60,000 F-150s. But maybe it's the E one. Maybe it's the F-150 electric one, the Lightning or whatever. That's like a $80,000 to $100,000 truck, which is stupid. So anyway, I'd say it's all a big old ripoff. So currencies. I've got a few more minutes before I wrap up the session. In the chat, do we have an 11 o'clock guest? Let me know if we do, just so I know I can wrap it up here at 11 o'clock. But I'll get some currencies here. Dollar index is kind of how it all starts. I've been telling traders this week in my room, watching the yen crosses pretty carefully. So, the yen is getting some follow through. Just take a look at the technicals. I've been mentioning this for the last several weeks. If we don't have any clear confirmation signs, don't force a bunch of sell trades. So right now, we finally done some damage on this Aussie yen. This low, we broke the trend line. So if we go from high, low, lower high, lower low, I could see that trade happening, right? If the Japanese yen is going to get stronger, that's likely risk off in the markets, by the way. And we might be dealing with some higher volatility over the next maybe 30 to 60 days. But classically, it's a Japanese yen pair. Is this a fall and then this thing comes back up here and then pauses and then it's like, okay, now what happens? Maybe it goes to highs again. Maybe the BOJ reiterates the same thing, which is, outside of some intervention, we're not really interested in changing policy. We're not looking to raise rates, blah, blah. I don't know. So I still, I trust the Japanese yen about 50-50. It's not my favorite currency pair. Why? Because it's not technically obedient like it is compared to others. My favorite currency pair is Aussie CAD, New Zealand CAD, Aussie, New Zealand. I trade the boring, efficient, find pivots, reversion trades. Every time they go up, they pull back. Every time they go down, they pull back. Those are my favorite currency pairs to trade. It's tough when you get a breakout and it's like, okay, this market's been going nowhere for months, and all of a sudden it decides to go 500 to 1,000 pips in a straight line. That's my least favorite trading. I don't like to have to switch and pivot strategies like that in an asset like currencies when it's a lot easier when they just always are efficient, which is the currency pairs I mentioned. Okay, so long story short, on the yen crosses, because we have some a little bit of accumulation in here, I would see that as a potential magnet for a pullback. Okay, so on the shorter time frames, I could see traders getting the benefit of a short-term scalp to the upside, but that area could quickly turn into a rolling over and another sell-off between these trend lines. So if we went from inner trend line to outer trend line, there's still several hundred pips up for grabs. I mean, if we pull back to 105, 106, and then fall back to parity, that's a 500 or 600 pip drop. Wouldn't be a bad trade. But I'd still say if I'm going to take that trade, I'm going to be trading very small and being pretty conservative. CAD yen, same thing. We're right on this trend line break. Where's the outer trend line? Probably down here. Where's the past level of resistance? Over here. So if it's breaking here, pulling back, looking to see if there's some follow through. That would be about it. Swiss yen is probably one of my better setups technically on the yen crosses. So a couple ways to play this one. Sell stop below and just see if this wants to continue. That's pretty easy, and that's out of the way because that way if the Swiss yen goes higher, you're not trying to guess, right? Also, with this being a sell-off point, if we go higher, 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 test the highs or run the highs, we could then put in a topping pattern and get a much bigger setup here later in the year. That wouldn't surprise me at all, actually, that this is now the left area, and this thing goes all the way back up to the highs, then folds over, and then we get a topping pattern. We trade a head and shoulders or a crown, and then we line up a really good trade. That would be something I'd sign up for. I wouldn't mind that trade. Okay, if you have other requests or currencies or charts, let me know. Let me know. Let's see here. Bank of England working with third-party supplier to resolve payment issue. What payment issue? Bank of England's having payment issue, huh? Does the Fed have payment issues? All right, pound yen. Pound yen. High, low, lower, high, lower, low. Here's a little flat pattern area around 205. Does that drop to the outer trend line? Maybe. Maybe. Okay. So watching. I said 209 to 215 for potential intervention. We made it up to 208. I tried. Didn't get it spot on. New Zealand yen. Throw a T on there. New Zealand yen. So this one has been just a slow grind to the upside for a while. Same type of thing. If this is as anyone knows what a cup and handle is, there's essentially no structure. So if this is a high to low pullback here, and then we drop lower, that cup and handle would be breaking that low. Also, this with structure down here, this could be setting up for a trend line break, right shoulder, and then break the neckline. And all of a sudden we have a big head and shoulders pattern with a much bigger move to the downside. Lots of past resistance here as well. So am I bearish on these yen crosses? Not yet. Not really. Not yet. Okay. By the way, looking at this short term, looks like we have some manipulation going on here. A little fake out. Is this going to rip up here and find that gap again? Maybe. Maybe. I'm going to stick with that 562 because I'm already in the trade. So it is what it is. There is my 1238 gamma level, contract-wise. Current net's 1238. Strike price is 562. So it would be nice to see if this thing can, be a bit of a drop manipulation, fake out those bears, and then rip them back up here. And let's find a gamma squeeze to 562. Yeah, I bought this thing around 5 when price is around 559. So it would have been nice to buy it $2 or $3 lower, but the expiration's out to tomorrow. Okay, that's short-term stuff. Currencies. Any other currencies? What else do you want to look at? Okay, is this microphone on? Where's the chat? I haven't seen anything in 10 minutes. I'm talking to myself. Who's out there? Bueller. Must be I'm not on Wi-Fi. I'm just talking like a crazy person now in a room all by myself. All right, fair enough. Just kidding. All right, South African Rand. Oh, Patrick. Man after my heart, dude. Little crazy trader. Dogecoin. All right. Dogecoin. Haven't looked at that in a minute. South African Rand, daily time frame. Here's what I'll say. Dollar index is choppy, right? Dollar index is choppy. You've got an exotic pair that's choppy. Okay. Right now, I'd say structure-wise, we have pretty solid support in here and resistance in here. The carry trade opportunity. So there's two ways this works, right? South African Rand versus the US dollar. Let me go to cbrates.com and see what South Africa's rate is. Right now, South Africa's at 8.2. If this is going to the downside, that would be a positive swap trade. The only issue with some of these exotic crosses is when we see risk-off trading. If we see risk-off trading, the dollar gets stronger, and it doesn't matter what the carry trade is, right? Again, if we're coming into support here and this thing bounces hard, let me zoom in. This is probably a pretty clean setup. Where if we come into support, I would say we have some support here on the RAND. So there's support, and then a little trend line behavior over here. So it's, you know, kind of coiling, kind of wedging. I would try to look for a trade where if we get some confirmation off this low, see if this dollar index wants to head back higher, and that would help the South African Rand find support, and just trade it, you know, back to the range. Looks like from around 17 and change to close to 20. I mean, that's almost 3,000 pips, right? So you're looking at about, I'm sorry, I meant like 10 to 20,000 pips. Yeah, that's 20,000 pips. But 20,000 pips is like, that's crazy, right? But you're getting like, you know, a penny per pip or 5 cents a pip. It's ridiculously small. And it's a lot of margin to trade these currency pairs. So look, I used to trade these exotics quite a bit. I traded the Mexican peso a lot. I traded the South African Rand. I did trade the Turkish lira. I traded the Russian ruble. I traded the Swedish krone, Norwegian krone. I've tried them. I've dabbled. They're fine, but they're high margin. They're a little bit less liquid than other currencies. They're certainly not majors and secondaries. So there's risk in that regard. But, you know, I mean, if you know what you're doing, it's just a trade. You know, one thing that's nice in Forex, if you trade small enough, it's just a trade. So it's not like you have to have a huge risk in here with them, but just be aware of the margins for what your broker offers. Okay, now we got some requests coming in. All right, so we got Doge, Aussie CAD, Euro dollar, silver. Okay, silver's a repeat. Here you go. Silver, I am long. Every time I say this, I just think of I'm just touting. Who is it? Not Zorro, the Lone Ranger, right? Long John Silver's. Hi-ho silver, right? Every time I say I'm long on silver, I just think of Long John Silver's. Anyway, stupid reference, but their hush puppies are good. I like silver for this. Gold is up. Okay, I'm looking to see if silver continues to catch up. I like silver to the upside. To me, this is still a measure move into the 30s. I would like to see if this is a low to high, a little bit of a pullback, and then more silver to go. Or are we going to see, you know, high, low, lower, ups? Let's go high, low, lower, high, lower, low, lower, high, lower, low. And this just has to accumulate a bit more, then go higher. But overall, I'm still bullish on silver. And I'm actually more bullish on silver than I am on gold, because I can still measure silver right now to the upside as opposed to gold, which is trading to all-time highs. All right, so we'll check that one off the box. Doge USD. Haven't looked at this one in a while. Not really interested in this one. My crypto, oh my gosh, get out of my screen. Come on, TradingView, you're better than that. I'm sticking with Bitcoin and Ethereum for my crypto. Okay, I don't trade Doge. I never traded Doge. I never traded Shiba Inu. I don't care about meme coins. I know Trump has a meme coin called MAGA. I don't give a crap about any of this stuff. Bitcoin and Ethereum, if they're the real deal, those to me are the ones. I mean, look, we're talking about legitimate registrations, you know, for getting SEC registered securities and approved ETFs. That's what I trade. You know, I'm just not interested. Now, what does Doge have to do? I don't know. But if you looked at support, you can certainly look to buy off these lows. If it comes back down to these lows, take a stab at it, risk defined. I would say if I put $1,000 on Doge, it's either going to zero, okay, or it's going up to these levels. So let's just talk numbers for a second. What would that percentage be? If I put $1,000 here at support, let's say we hit that level and we go up to revisit the highs, I would turn $1,000 into about $3,000. It's pretty good. You know, $3,500, not bad. It's a trade, but it's risk capital, and it's not something I'm personally not going to touch this thing. But that's what I see. Just watch the lows, watch support. I look to buy low. Akash says, sir, can I ask you something? Of course. Oh, about the pound yen. Of course. Yeah, sure. Euro dollar, Aussie CAD. Okay, let's do those really quickly. And then A1 team, if I need to go at 11, just let me know. If we're okay, then I'll just keep taking some requests for a few more minutes. But I'll wrap up here in just a moment. Aussie CAD at 92. I'm long in this one. Any type of dips and pullbacks, this could be a slow burn channel to the upside. Okay, but I'm looking to get back to these highs around 94 to 95. So any pullbacks here on Aussie CAD, I'm bullish, and I'm looking to take it up towards 94, 95. Meaning like 9,400 and 9,500. That's my profit window. right? Euro dollar, we did. Euro dollar, you got to watch the dollar index. I don't really have a good decision on dollar index or euro dollar right now. I'm out of this one. Silver, we did. Pound yen, what do you got? Nick Phillips, ready to go? Okay, Nick, sounds good. I'll let you have it here in just 1 minute. Do I trade Sol US dollar? No. I did in a little bit. I had holdings of like Gemini, Batcoin, Solana. I had some of those. Once I had a big pop when we hit that first all-time high with Bitcoin at like 60 to 64. I dumped all those positions, turned them into cash, and converted them to Bitcoin. So my holdings are Bitcoin, Ethereum. That's it. Okay. Is it possible for the pound to fall against the yen? It's more so. It's not really that. It's more so that you need the yen to get stronger. It's not about the pound falling against the yen, because what you're looking for on all the yen crosses is the yen as a basket has to be the mover. That's what's so tricky about the yen. Right now, the yen has very little reason to go strong. Bank of Japan isn't really shifting policy. They're not being hawkish. They've just gone from negative interest rates to zero. The carry trade is still alive and well. It's the best arbitrage in the world right now, which is you borrow in yen and you buy anything you want and get swap. Until that goes away, the Japanese yen, and if we have some risk appetite out there, the Japanese yen just doesn't show the type of strength that we would probably like to see. Okay. All right. Nick's in the background. I'll let you go for today. Thanks for being with us here for this segment. Nick Phillips is coming up. Have a good rest of the day. Like and subscribe as always. We'll see you soon. Thanks.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Hey, what is going on, everybody? I am just adding in my Instagram stream key here to get this going live on my Instagram. Welcome to this segment, Chris Pulver. Thank you for turning it over to me. Did a great job. I love watching Chris's stuff when I jump on and see he's live. I learn a lot from that dude. He truly a expert of so many things. Very cool to see him in action. All right. And I believe I am live now on Instagram, so we're good to go. All right, guys, what's up? Let's go over a couple things here. I wanted to first take a look at what I've been doing over the last 24 hours. So this is kind of, I've kept a little bit of a track record here. It's becoming a bit of a track record here on my blog on Substack that I've started. So first, the tech issue, right? So this is something that I had going on yesterday with my prop firm that I'm working with, which is TopStep. We had a ton of tech issues yesterday with Tradeovate and TopStep X and blah, 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 blah. And basically, I wrote this blog article about dealing with tech issues and how it's a normal part of the process, right? If you guys have ever used any kind of software for your trading, we all have, all human beings have, right? Oh, I thought I was sharing my screen. I am not sharing my screen. Boom. Share. Cool deal. So this article is basically, it can all be summed up in this little paragraph right here. Cash is a position, right? Oftentimes as traders, we feel the need to be involved in the market as much as possible. So when you're having tech issues, it can be a very how can I say this? It can be very tempting to lose your mind a little bit because you're having tech issues. And I saw it yesterday in a bunch of the discords around some of the softwares that were facing issues. People were absolutely losing their minds. But you should take tech issues, if you face them, when you face them, I should say, you should take it as a signal. I said this right here. This was maybe one of the most important paragraphs of this entire article. Tech issues can be frustrating, but they should be treated like any other signal from the market. If the opportunities you are looking for are not present, you should walk away and come back again when the opportunities are present. So, was dealing with that yesterday afternoon. Tech issues started to pop up. I had actually, it affected a trade that I was in. I took a JPY buy. I was up about $500 on my combines, and I hit exit. And when I hit exit, my order fill was absolute trash, and I ended up down like $100. Didn't make any sense. So I contacted support, and they are working on that. But that's another part of tech issues. If you're dealing with them, just reach out to support and be patient and act like a professional. All right, so let's see. Moving on from that, we had the odd employment data drop last night. So by the numbers here, you can see the unemployment came in pretty hot, which is negative for the Australian dollar. But employment change, participation rate, and full-time employment change all came out with upside for the Australian dollar. So we had a bit of a mixed bag. Now, we don't trade mixed data in my private group, right? We need all the data to point in one direction or the other. However, I did trade this mixed data, but it was on accident because I like to categorize accidental trades as fat fingering. If you get into a trade on accident by swiping across your mouse or hitting the enter key when you don't mean to, or vice versa, you get out of a trade the exact same way. I call it fat fingering the trade. I fat brained my trade last night on the Australian dollar because I saw the unemployment number. I saw all of these numbers, and for whatever reason, my brain said, what did I say exactly? High numbers across the board, Australian dollar strength. Don't know why I did not formulate this thought process a little bit better, but it is what it is. I got in on the trade, and then as I was in this trade, the management of it was interesting because I did not realize that I had messed up my data read until I was sitting down in this area in drawdown. So I took profits right here in this area, got a nice little 1 to 1.2 off of this, and then price came back down to break even. I was considering getting out, went and reviewed the data again and realized my blunder, but I decided to accept the rest of the risk because I had already taken out partial profits. If I had hit stop loss, it basically just would have been a break-even trade for me. And so I decided to hold a little bit longer. Once price came back up into this area and started trading above this zone and gave this little bit of rejection, pop back up here. I got out right about here, just to go ahead and protect myself from the mixed data. So overall, nothing that we can take out of this data moving forward for what the Australian dollar may or may not be doing because it's mixed. You have the unemployment numbers pointing towards a softening labor market, but you have the employment change, participation rate, and the full-time employment change pointing to a stronger Australian dollar labor market. So mixed data. What do you do when one's pointing one way and one's pointing the other? You walk away and you look for another opportunity. Beyond that, we also had pound employment data this morning, and that was another mixed bag. You had unemployment coming out lower, the unemployment change coming out lower. You had the employment change also coming out lower. Unemployment change coming out higher than expected, the employment change coming out lower than expected, and then the average earnings, which is the most important thing right now for UK labor data, is the average earnings. The ONS is having statistical data issues that is causing the employment change, unemployment change, and unemployment rate numbers to not be entirely reliable for the markets. They have said that by Q4 of this year, their new data collection method should be rounded out and tested thoroughly enough to where they will trust it again as being reliable data. So the only thing that the market can really take into account when it comes to UK labor data, what it can count the most credit by is the average earnings, because these numbers are not affected by the ONS statistical data issues. And we got those right as expected. So personally, I was up last night through 9:30 p.m. Eastern Standard Time to trade odd, and then past that to 2 a.m. to trade UK labor data. And then I was up again at 8 this morning to trade the Euro Central Bank interest rate decision, which was a kick the can down the road. We're data dependent, waiting for the next batch of data before we make any decisions. Let's see if we can pull up ECB. All right, guys, as I'm going through this, as always, if you have anything that you want me to check out, go ahead and drop it in the chat. And when I get to the Q&A portion of this segment, I will go through all of the pairs that you guys ask. So let's see. Okay, so right here. The Governing Council will continue to follow a data-dependent and meeting-by-meeting approach to determine the appropriate level and duration of restriction. In particular, its interest rate decisions will be based on its assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. So, for us, looking forward to Euro data in the future, what are we going to be paying attention to the most? Inflation. That's what they have said. In particular, they're data dependent. In particular, their interest rate decisions will be based on the inflation outlook. So we will be paying attention more so to inflation numbers out of Euro than anything else. Labor data, growth, any of it. The most important thing to us is going to be the inflation outlook. And then President Lagarde got up and spent about 60 to 90 minutes answering questions and continuing to kick the can down the road with a bunch of data dependent lines of talking. She did say, yeah, inflation is to fluctuate near the current levels for the rest of the year. So inflation is going to just kind of hang out. It's going to consolidate, right? Not really actionable. Risk to growth are tilted to the downside. That's, a little hawkish in terms of the risk. If I'm reading this correctly, the risk to growth are tilted to the downside, so they're experiencing less risk to growth. Wage profits and geopolitics are upside inflation risk. So this is another little bit of something that we've been watching for the euro with the French elections that have happened over the last few weeks. Is the geopolitical situation in the area? How is that making investors confident or not confident when it comes to investing in the euro? But overall, a very data dependent, nothing sandwich out of the ECB meeting this morning. And that has basically been our morning. We had a little bit of mixed data out of the jobless claims situation with the US. So we're seeing higher than expected jobless claims, initial and continued, but they are inside of the bank range figures. So if you see here on this terminal, we have the low and the high from the polled financial institutions for initial jobless claims. The high was 250. We came in at 243. And then for the continued jobless claims, the high was 1899 and we came in at 1867. So while both of these numbers came out above the previous and the forecasted median, they were inside the bank range, not enough to surprise the markets. You add that to the fact that we had positive data out of the Philly Fed business index, it has just been a mixed data type of day. So personally, when it comes to the dollar, my opinion is that the dollar's on a bit of a relief rally from all of the CPI weakness. We have seen a weak dollar, and now we need a little bit of a relief rally. I don't anticipate it going back up above 104.5 unless we get data next week that tells us something different. But I could see it doing a couple things. Today is Thursday. I could see today and tomorrow being a bunch of nothing. It could hang out in this area, maybe pop up into this zone and consolidate, or it stays here and consolidates. The other thing I could see it doing is finishing out the day in this general area, and then tomorrow at the end of the week, falling off to close the week on a heavier bearish note. But I really don't anticipate getting involved in this unless I'm seeing some solid downside move at the beginning of New York session tomorrow. Let's see. Let's go take a look at NASDAQ. I haven't looked at NASDAQ or ES in the last like 2 or 3 days. What a fall off. Very bearish week. Definitely counter to what we've been experiencing for the last couple months. So interesting to see where this is at right now. This is tough because equities indices have just been on an absolute tear to the upside. So if I was looking to get involved in a buy situation on this, I would maybe let price give me a bit of a bullish indication here on this support area. If it breaks down below this support area, I think the next major target would be this area here, where you have previous resistance turned into support and pushed up from there. But I don't know. It's going to be tough. I believe, if I remember correctly, that the fall off of NASDAQ specifically over the last couple days has been due to the chip issues with NVIDIA. Don't quote me exactly on that, but I do remember hearing whisperings in the interwebs yesterday about the NVIDIA chip issues. Let's see. NVIDIA shares tumble over 6% amid geopolitical fears in chip sector. The global chip stocks from AI giant NVIDIA tumbled. The drop came as the Biden administration weighed tighter export controls to stymie, I believe that's how you say that word, China, and former President Trump made comments that sparked fresh doubt about America's commitment to defend Taiwan. So the issue surrounding the basically the entire chip market that AI is backed off of is what is causing the NASDAQ to drop so heavily. So very, very interesting stuff there. All right, let's see. All right, guys, if you have anything, any charts that you want me to look at, anything you want me to go over, gold, Euro, USD, anything like that, feel free to drop it in the chat. I would love to see some dollar weakness actually start to pop into the market this afternoon, so I can buy this yen up a little bit from this area. It's not a bad little support zone, which again, for those of you that aren't trading futures, if you're trading Forex, this is the exact same thing as a UJ sell. Looking for UJ sells from this area too, being a sort of a pretty tough resistance. It popped up into here and then dropped all the way down to here from this area. So would be great if we could get some dollar weakness to start factoring in. I stay in Arizona, and man, the dollar is weak. LOL. The unemployment claims came in hot. A lot of people not working right now. So the problem with the unemployment claims coming in hot, I'm definitely not going to, say that you're wrong on that. They came in hot, but they weren't outside of the bank range high, and we had good data out of the Philly Fed Business Index. So typically, if the unemployment claims were like ridiculously hot and you had no other factor, we would have already seen the doxy fall to the downside, right? So this data dropped at, when was it, 8:30? And we had this initial drop to the downside where a ton of people, they see this number. People see this number, initial jobless claims 243. It came out below the median forecast, or if you go to Forex Factory, this is what a lot of people that try to trade data don't always understand about it. Unemployment claims 243 came out above 229, right? And so this means more people are claiming unemployment, less people making money. Less people making money means less people spending money. Less people spending money means inflation has a chance to come down, and then vice versa. Interest rates can, not vice versa, but continuing off of that, interest rates could have the opportunity to come down. The problem with that is there is these ranges from the major financial institutions, which are the real market, right? Like they're the big players. They submit their ranges for what they anticipate the number to be, and this forecast is just a average of those numbers. So with that being said, this came out above the forecasted, but inside the bank range. It doesn't, yeah, it might be hotter than the average expectation, but it's not hotter than the overall range. So there's only so much of a surprise that can be gained from that information. It's not so incredibly weak that it dragged the dollar down from here. And in fact, the dollar completely rallied beyond the price that the dollar was trading at when the data dropped. Yep. So yeah, you got to watch how the dollar reacts. For me, again, I can't trade this. I couldn't take a US dollar trade this morning the way that I typically would, which is I'd pick something like Australian dollar. I like to trade AUD against the US dollar a lot. This would have been a buy scenario for me, which would have played into the sort of mixed data trade that I played last night. But right here is where that data dropped on the 1 minute. Let's go to the 5 second. I tend to trade this stuff off the 5 and the 15 second. I like to get involved really quickly if we get the right data. But when this data dropped, it was immediately a no-go for me because jobless claims came out showing us dollar weakness, and Philly Fed Business Index came out showing us strength, a little bit of weakness, strength, weakness, strength. This is mixed data. So this tells us dollar strength and this tells us dollar weakness. I'm not getting involved at all. Now, caveat, had the jobless claims and the Philly Fed Index both came out printing red, showing us dollar weakness, and we had this little red lightning bolt here pop up that showed we got a surprise outside of the high and low ranges, in this case, it would have been the low for the Philly Fed and the high for the jobless claims. If all of that had came out perfectly, I would have been involved in this trade within 5 to 15 seconds, taking it to the upside. It's the exact same trade that I took last night on odd. I got in right here on this candlestick pullback. Now, granted, again, I misread this data, but the same idea applies. The data drops, the markets agree. I get in within 5 to 15 seconds and get out usually pretty quickly. I tend to have areas marked up ahead of time on the higher time frames, like the 30-minute, 15-minute, 1 hour, to see where price may face challenges trying to break beyond with that new data hitting the market. Yeah, as far as the dollar strength today, Yeti said, I hope the dollar gets weaker. The dollar could be strong a little. The Doxy strength today, I mentioned this earlier. I think it is simply like a market, the market experience of relief after a big move. So whenever you have a move in one direction, you have a relief rally. You have a little bit of a pullback. Another move, you have a relief rally. It doesn't mean like the Doxy isn't necessarily strong in this area. It's just relieving a little bit of the pressure from the selling. Relieving some of the pressure. It's not, to me, the Doxy is not strong. It's still weak. And so what's happening right now? Well, if you're holding to the selling bias and you're not just trying to scalp this going both ways, you're simply waiting for an opportunity somewhere within this leg to get short. Maybe even the top of this leg if it comes all the way back up here to retest 104.5 area. But for me, I'm looking for somewhere in this zone to get short. And it's probably going to be a factor of tomorrow morning, maybe during New York session, at the open of the New York session. If the volume starts to come in and shows us that the market is ready to start shorting the dollar from wherever it's at in the morning, that's my anticipation. But, I could be wrong. This thing could just hang out and wait until next week. We have flash PMIs on Wednesday. We could see a bunch of nothing out of the dollar until next Wednesday. All right, let's see gold. Gold is obviously still bullish. I think I said this yesterday. I don't love gold at these levels for anything. I don't want to short it from here, and I'm not interested in getting long from here. If something insane was to happen, now this is really interesting, and this is a way that you can trade gold if you're not aware of this. Trading gold as a safe haven. So Saturday, U.S. President Trump there's an assassination attempt on his life. That is a very scary thing. Absolutely terrifying. Gold on Sunday opens up to the downside a little bit, but ultimately ends up over the course of the next few days acting in a safe haven flow manner. For me, I didn't get involved in this trade because it wasn't an immediate reaction. Sunday night, I was looking at the market, waiting for that risk off scenario to start immediately populating itself, and it didn't. So I kind of took that as a signal from the rest of the market that they didn't care about the assassination attempt of the former U.S. president, which absolutely blows my mind. It doesn't matter who it is. If it was Trump, if it was Biden, if it was Obama, Bush, take us back 50 presidents, any of them having an assassination attempt on their life is absolutely mind-blowing to me. And I thought for sure it would factor in a risk-off scenario for the markets. Now, I say all that to say, if something wild happens, Again, let's say China invades Taiwan tomorrow. Hopefully it doesn't happen. But if they do, you should theoretically see safe haven flows immediately start to open or flow into gold, because the markets are going to get fear, uncertainty, and doubt. The emotions of the market, fear and greed, drive the market. When the market is fearful, gold is going to pop to the upside because it is a safe haven currency. Investors will take their money out of the stock market, out of traditionally riskier assets, and they're going to put them into safe havens like gold. So, and the US dollar. So US dollar is a safe haven, Japanese yen is a safe haven currency, gold is a safe haven. Some of your risk assets are things like your equities, your stocks, your Australian dollar, New Zealand dollar, CAD. They're all risk asset currencies. They will fall to the downside, and gold, US dollar, Japanese yen, Swiss should theoretically pop to the upside. But yeah, that's the only way I tend to trade gold is based on safe haven flows after something major has happened. So maybe once, 2, 3 times a year, possibly I'll trade gold. It's not often. Let's see, 11:32. If you guys don't have any more questions for me, I think I'm gonna go ahead and wrap up here, and I will see you guys on the next one. I'm gonna give you guys a couple minutes to type up anything if you have any questions. I'm not seeing anything come through yet. All right, guys. What's your YouTube page again? My YouTube is official Nick Phillips. My Instagram is official Nick Phillips. The only thing that is different for me is Twitter, which is it's Nick Phillips, official Nick Phillips. Somebody already got that one, so couldn't get that. But official Nick Phillips on everything. Substack is honestly CHF JPY Safe Haven. See, Lee James, that's a very good question. The pair CHF JPY. This is where trading currency pairs, the nuances behind them are important to understand. If you have a safe haven event hitting the market where your safe haven currencies, which are going to be USD, JPY, CHF, are anticipated to go to the upside, something like CHF JPY, you have CHF is strong and JPY is strong. You're trading a strong currency against a strong currency. Not a great idea. So what's better? In a risk-off scenario, a brand new war pops off tomorrow. If you want to trade currency pairs that aren't, US backed or something, you want to pick something where you have a safe haven strength versus a risk asset weakness. So what would this be? You could take something like odd CHF to the downside. So in a safe haven situation, you have the risk asset odd going weak, CHF going strong. That's a lot of volatility coming into that pair. Odd JPY, the exact same thing. Odd USD is pretty much my go-to because I trade futures. So I tend to trade Australian dollar futures to the downside in a risk-off scenario. Let's see some other examples. Some other combinations here. CAD JPY in a risk off scenario should go to the downside as well. You have a risk asset being the Canadian dollar against the Japanese yen, a safe haven. NZD JPY to the downside, NZD CHF to the downside. I wouldn't trade UJ as a safe haven flow. I wouldn't trade USD CHF as a safe haven flow or CHF JPY as a safe haven flow. Likewise, I wouldn't try to sell odd NZD in a safe haven situation. I wouldn't try to sell odd CAD because I've got two weak currencies. I wouldn't try to sell NZD CAD because again, two weak currencies. So you want to pair a weak currency against a strong currency. When it comes to trading currency pairs, that's like foundational fundamentals. You want to trade a strong currency against a weak currency at all times. If you have two strong currencies in a situation and you're trying to buy up the currency pair, like Swiss JPY, you have two strong currencies. What is most likely, how should I say this? What is highly likely to happen is this, because you have strong against strong, it's going to go nowhere, right? And maybe it'll go a little to the upside. But if you were to take this same trade with a pair like odd CHF at a time where CHF JPY would be going maybe a little bullish, you're going to see odd CHF with much more volatility to the downside. Is CHF JPY a safe 2? I think hopefully I answered that for you. CHF JPY. So each currency by itself, CHF, the Swiss franc, is a safe haven, and JPY, Japanese yen, is a safe haven currency. The pair itself, not something I really would trade in a safe haven or risk on or risk off manner. Odd JPY. Frog Boy, are you asking me to look at that pair or explain how that works with risk flows? Yeti, I am. You've been following me for 5 years. That's crazy, dude. That's awesome. Only you will know if a pair is safe. Risk flows. Okay, so Frog Boy, odd JPY, risk flows. So let's do this. I'm going to scroll in here. Bring us to a little bit of a... What the hell? All right. Risk flow lesson. We'll go safe havens, risk assets. All right. So in times of geopolitical turmoil, we have, let's just say, Israel and Hamas attack, October 7th, right? So the world is scared. Something major is happening. Everybody's holding their breath a little bit. Where is this about to go, right? The world is feeling fear. The markets are feeling fear. Investors are going to take their money out of assets that are traditionally seen as riskier. They're more volatile. It's not something you want to hold at a time where you're scared. They're going to take it out of your risk assets. We'll list the currencies right now. AUD, NZD, CAD. They're going to take them out of these assets, and they're going to dump them into USD, JPY, CHF, typically. Another example of risk assets are your equities or your indices, being NASDAQ, all stocks, basically. They're going to take money out of stocks and they're going to funnel them into something like gold, maybe. So at a time when people are feeling scared in the market, you're going to see these. Let's see if I can go bullish. Safe havens are going to go bullish, and risk assets are going to go bearish. So let's break that down for pairs. We'll go risk off scenario, which is the world is scared. You're going to see USD odd, USD bearish, NZD, USD bearish, odd, JPY. Here's your answer, Frog Boy. Bearish. Feels like such an insult calling you Frog Boy. I think that's my new favorite insult. I hope I don't offend you with that, but I'm going to call people Frog Boy from now on. Somebody's messing with me. All right, let's see. NZD, JPY, bearish. CAD JPY bearish. AUD CHF will go bearish, should go bearish. NZD CHF bearish. CAD CHF bearish. And then let me also do, am I missing something? I am missing something. USD CAD bullish. And then NAS, ES, Dow should go bearish. And gold will go bullish. And then to do, I believe I got everything. Yeti said he started off with GBP USD, but that thing is ugly. I'll be honest, man. I started off, I've been in the market since 2017. So I've traded a vast array of approaches. One of the coolest things that I ever learned about trading Forex specifically, but it applies to all markets, is knowing the fundamentals of the market as a whole, the macro fundamentals, will help you to identify opportunities across a wide array of currencies. So you hear this kind of train of thought in the mainstream trading Instagram influencer world, where people say stuff like pick one currency pair and master it. Like, that doesn't make any sense. If I was to say anything, I would say pick fundamentals and technicals and master them, right? Because the asset is going to be, it should be based on fundamentals to some degree, right? I think there may be some technical opportunities across an asset that might not have any fundamental bias baked into it. Cool. But for the most part, you should be looking at the asset. You should be choosing an asset based on fundamentals of that asset. If you get news that hits the market that tells you the New Zealand dollar is incredibly fundamentally weak, but we see the New Zealand dollar trading higher, and then as that news hits, starting to price in that new weakness, you want to be involved in NZD to the downside. And a way that you could pick a good NZD pair, if you're not just trading futures, is go to a currency strength chart. You see NZDs going to the downside, look for the stronger currency. The strongest currency of the session might be a good pair, a good currency to pair that up against. So NZD to the downside, and we have USD to the upside. You're going to sell NZD, USD all day long. That's I think one of the most professional ways to approach picking your assets, right? Is let the fundamentals drive your asset decisions. But all right, guys, I've gone over here a little bit by about 15 minutes, I think. Feel free to follow me on everything at official Nick Phillips. My Substack is my new love. I have thoroughly enjoyed and found a lot of satisfaction in writing about the market in these blog style posts. So I've got stuff in here where I follow up on economic data releases. I follow up on a tech issue that we were having across the board yesterday, and then some psychology stuff. This is, a little article here on my thought process behind the assassination attempt of Donald Trump. So yeah, if you want to follow me there, follow me there. I'm very excited to be writing some on the market now. And if you guys have any questions, feel free to hit me up. All right, guys, I will see you on the next one. Y'all have a great day. From all of us here at A1, safe trading.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.